infectious the moment you walk through the door. I'm not so convinced that just having a negative test is enough for that purpose.
I know we're all thinking about Lollapalooza, by the way, so I will mention that Lollapalooza was considered to be successful in Chicago. That was, you know, you had to be vaccinated or have a negative test, and that was outdoors. I'm wondering about the risk of serious illness, Sam. If I'm vaccinated fully, but get the virus, what are the chances that I end up with serious respiratory problems? I think that's one of, the biggest concerns for the vaccinated.
Yeah. Not very high. Let me read off some numbers for you. Unvaccinated, this is all against Delta. 74% had a fever, 40% vaccinated had a fever. Shortness of breath, 13% unvaccinated had shortness of breath. Only 1.4% of the vaccinated had it. The only thing that went up if you're vaccinated was a runny nose. I think we can manage that. Then another one, pneumonia. 53% of the unvaccinated got it, 21% of vaccinated. Oxygen requirement, 21% of unvaccinated, 3% of vaccinated. And the best, cherry on the cake, ICU admission, 5.4% of the unvaccinated with the Delta infection, 0% with vaccinated. This is what we want to see. But of course, our world is focused on mild infections at the minute.
All right, I'm just sort of running those numbers through my head and trying to figure out what I can deal with.
You'll get them hopefully in the notes. I'm just getting through editorial.
All right, excellent. So I look forward to reading your work. Sam, thanks so much for joining us again. Bloomberg Intelligence's Sam Fazeli talking to us about the latest as we see continued spikes in the Delta virus. Coming up, chip shortage setbacks may last for the car industry into next year. That's according to the CFO of Ford, John Lawler. More next from our interview. This is Bloomberg.
Up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astracoma carinata.
I nailed it.
It's not thera, whatever. Astracoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons here in New York. Danny Berger is in London. Francine is off this week. Ford says it sees the chip shortage potentially extending into 2022, but raised its full-year forecast anyway thanks to a surge in pricing for models that are becoming hard to find. The CFO, John Lawler, gave Bloomberg his outlook.
What we see happening for us at Ford, the chip crisis was a disproportionate issue for us in the second quarter. One of our key suppliers in Japan had a fire at their fabrication facility, and that shut down production in the quarter. And 70% of the volume that we lost, more than 70% of the volume that we lost in the quarter was due to that. They're up and running, so we will have those chips flowing to us starting this quarter. All in all, though, we're seeing a 30% sequential improvement in volumes through the third quarter into the fourth quarter. But again, you know, this situation is opaque. We're managing it week to week, day to day. And, you know, it's something that we're going to have to deal with through the rest of the year and potentially into 2022.
John, there are other things that are a little hard to come by these days that when you start building EVs, requires an enormous amount of copper, right? Nickel. How about all of the components that go into making batteries? Is it possible to even forecast the supply of these when you know that demand is so high and it's hard to get a sense of supply right now?
Well, that's the thing, a silver lining coming out of the chip crisis for us. We're a new company. We're spending a lot of time benchmarking others. We're talking to all our big tech partners, leaning into how they manage, complex, high-tech supply chains. And we're applying those learnings to what we're going to do with batteries. We need to get deeper into the supply chain. We've got to get to the source. We'll have to do strategic buys. We'll have to make sure that we have multiple sources for certain commodities that are going to be critical to us. So we're learning a lot from the chip crisis. We're going to apply that to our purchasing process, much more strategic. Our industry has typically been focused on just-in-time supply. We're shifting, more strategic, focusing on how we manage the risk as we work through the supply chain. And then for batteries, which are going to be a key component for us going forward, we're going to manage that, and we're going to be deeply involved in that from a strategic standpoint.
That was part of Bloomberg's exclusive interview with Ford CFO John Lawler. Well, we're joined now by Tom Keene, co-anchor of Bloomberg Surveillance, fresh off a long weekend. Good morning, Tom. What are you watching on this Monday morning?
I'm watching next weekend. I hope it's as long as the last weekend.
You and me both.
Kaylee, we're looking at equity markets lift, and part of that is what the fixed income space is doing. You start the month with greater negative yields. We had a negative 2.00% on the 5-year, not the 10-year, the 5-year inflation-adjusted yield. It's an interesting chart. The 5-year giving you more oomph than the 10-year, even though the 10-year is really sort of the benchmark. There, down we go to the oddest of odds. Kaylee, none of this at negative 2.00% is in the textbooks.
What are you watching in terms of the Delta variant? I mean, it seems to have popped up again, Tom, in terms of fears.
Here's what I'm watching, Matt. I was pretty aggressive on the weekend on this on Twitter. I think it's hysteria. I started talking about that last week, John. Matt, we got to go back to science. It's all there is to it. Look at the science, not at the hysteria that's out there. Frankly, I think we're in a pretty good space if we are vaccinated. If we're not vaccinated, it's not a good space.
All right, Tom Keene, keeping us all level-headed this morning, as always, co-anchor of Bloomberg Surveillance. Thank you so much. And, of course, Tom, Lisa, and John will be joined by a number of guests in the next hour and beyond. Michael Shaul of Market Field Asset Management, as well as Lisa Hornby of Schroders. Now we're taking a look at what else we're watching. And, Matt, I would not be able to say that I'm surprised with a serious face. You are watching sports cars.
Well, I'm watching Ferrari, which is different than other sports cars, right? I mean, it's just on another level. And for years, the stock has been on another level as well. I was down on the New York Stock Exchange floor when they first went public. That was the first time I met Piero Ferrari, which was pretty exciting for me. Johnny Alcon was down there as well. And their margins have been the best in the industry. Just unbelievable, like margins for Hermes handbags rather than cars. But this year, their stock has really underperformed because they haven't really made the shift to electric the way others have. So I think everyone's going to be watching this earnings call, especially with an eye on what their spending plans are in terms of shifting to electric. Danny?
I also just want to know when their F1 team is going to get more podiums. Carlos Sainz finishing fourth, getting a bump up to third because of a technical issue. That's what I want to know. Maybe that'll help sales. Well, look, I am watching a U.S. ban on Chinese companies, specifically investing in them, took place at midnight. 59 companies. Investors have a year to move out of them. But what happens with that ban, considering that China has called for the U.S., saying we want more communications, specifically on overseas IPOs. So this is a clear point of tension when it comes to investing in the capital markets between the two. Is there any more action today, any more words out of Beijing and Washington, Kaylee?
Certainly one of the top market stories of the time. I also am watching ISM manufacturing data that's dropping here in the U.S. at 10 a.m. Eastern time. We're looking for a print of 60.9, but it'll, of course, be an interesting read on what factories are dealing with any lingering supply chain issues and pricing pressures. And also keep an eye, too, on the employment index within that data. It dropped in June, showed the inability of employers to find and retain workers. So we'll see if that's the case again in July or if the labor side of that story has improved. More Bloomberg surveillance is ahead. Stay with us. This is Bloomberg.
Assess the sector as a whole? Is it making a better case for itself at the right price at this point?
Most of the big hedge funds, most of the people that have been growing have been delivering very good performance. We have, but so is a number of the peers. You know, it is definitely the hedge fund business is getting more about the large getting larger and generating more performance, being able to hire the best people, thereby generating better performance, thereby getting larger. So when you look at the performance of the largest, say, 20 or 50 hedge funds, the performance has been pretty good over a number of years, and the inflows have been pretty good. You know, this is another quarter of positive inflows for us. I think one of the bits you're seeing at the moment is every client is worried about inflation. When they say they're worried about inflation, what they really mean is, I own a load of bonds, is that going to cause me a problem?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Looking for a pretty significant deceleration as we go into 2022.
That growth is going to be strong, just not as strong as the first half.
As we go forward here, I think you potentially could see some more bumpiness.
We're still getting some very high and potentially very concerning inflation reading in the near term.
I think we're heading to a transition one ultimately that will create a stronger dollar.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Pushing ahead to Payrolls Friday, live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Up 26 on the S&P, advancing 0.6%. TK, this Friday, your estimate, 900K.
Yeah, I really agree, John. On a Monday, to get out front of the Friday jobs report is a big deal. Many people at 1 million jobs to be created, and that talks about a recovering economy.
Speaking to the unknown, 1.2 million, the high end, 356K, the low end. We're still in a land for economists on Wall Street, Tom, where nobody seems to have a real clue with any confidence or conviction what this labor market's going to look like in the next several months.
Yeah, I think in the labor market, that's true, John. And of course, we'll get a lot of economic data on the mystery of the Q3 we're in right now. In Q4, there's no mystery to the equity market. And John, look at the adjustments we see. We're beginning to see off of earnings. John Stolfus at OPCO out moving from 4,300 to 47. He's been a resilient bull, John, and maybe he's a resilient bull about the jobs report as well.
6 months of gains, Lisa, on the S&P 500 coming into August. It's quite a run.
Yeah, and just because it's been old and just because people have been questioning it for a long time doesn't mean it can end, especially with these incredibly low real yields. There is a question, though, about margin pressures, and we've been talking about that after Q2. Some people saying that margin pressures have been overblown with a lot of companies able to pass along price increases. Really, the focus is just on wages increase in order to understand the persistency of this inflation.
Futures looking okay this morning. Good morning to all. Your Monday morning price action shaping up as follows. At 25 points on the S&P, up 0.6%. Looking elsewhere in the bond market, yields going nowhere at 122.55. Your FX market, euro dollar approaching 119 again, positive 0.2%. Lisa, 118.96.
Yeah, it's really active, thrilling. I'm very curious to hear about Tom's characterizations of this market this morning on this Monday.
It's phenomenal.
It's a really busy week. Today, however, not as much. 10 a.m. we get U.S. July ISM manufacturing data. The focus will be on prices. How much are they rising? How much those price pressures are really crimping manufacturers? We got that data over in Europe earlier this morning, and it showed a record pace of hiring, trying to meet demand. This is a theme, and it continues to be, and how much more focus is going to be on this area as the reopening gets delayed from the Delta variant. 12:10 p.m., U.S. Surgeon General Vivek Murthy is planning to join Bloomberg Television. I'm interested to hear what the guidance is in terms of vaccinated individuals, the Delta variant. We heard over the weekend Anthony Fauci of the National Health Institute coming out and talking about how it is really bad, but he does not expect another wave of lockdowns. What's the threshold of pain that we're looking for? What is sort of the criteria to decide how strict to get with respect to masking, with respect to lockdowns? And today, senators are set to begin the amendment process on the 2,702-page infrastructure bill that did get solidified yesterday in terms of language. $550 billion. There does seem to be bipartisan support. However, watch the House. House Speaker Nancy Pelosi saying that she is not even going to bring this to a vote in the House of Representatives unless there is some sort of action on the Senate's part with respect to the $3.5 trillion plan that is going to reconciliation, John.
Lisa, thank you. We'll head down to D.C. in about 10 minutes' time. Let's head to the Federal Reserve. This was from Governor Brainerd going into the weekend. The following quote: I expect to be more confident in assessing the rate of progress once we have data in hand for September, when consumption, school and work patterns should be settling into a post-pandemic normal. Let's bring in Andrew Hollenhorst, City Chief Economist, on that line. Andrew, September and September data, that's the core of the Fed there with Governor Brainerd. How important is that?
I think it's a really important statement. I think what Brainerd is doing here is really sending a clear signal that she is not going to be willing to support changes to policy before she sees that September data. And remember, that doesn't come until the beginning of October. So that's a little bit different from what we heard from Chair Powell. Chair Powell kind of left things a little more open, a little more flexible. We're watching jobs reports, but for Brainerd, clearly it's going to be what happens in September, children going back to school, unemployment benefits coming off. How much does that allow the labor market? Supply constraints that we've seen, the shortage of workers, how much does that ease?
What is your Q4 estimate? That seems to be the big mystery, Andrew. Do you have an actual statistic, or are you like Governor Brainerd, just waiting and waiting for data?
Yeah, I mean, I think realistically, all economists right now are waiting to see how the data come in. Again, I think it's interesting, actually, that we have this emphasis on the jobs numbers. Of course, we should always be watching the labor market. That is part of the Fed's dual mandate. But the issue we have here is not a lack of demand for workers or a lack of demand in the economy. We just saw that with Q2 GDP. The issue that we have less dovish based on the jobs numbers that we get. If we get weaker jobs numbers or weaker activity numbers, it's probably due to a supply side issue, not a demand side issue. And that's really not an issue that monetary policy can address.
Andrew, what should they be watching then?
So I think what you want to be watching here is prices above all else, and that's prices for goods in the economy, prices for services, and that's what we're starting to see is some of this inflationary pressure that's broadening out. It's not just about used cars, it's about a broader array of issues, as well as wages, which is maybe the key price for the economy. So upward pressure on lower end of the spectrum wages, that's certainly good news for those workers, but does it become an issue where those wage increases are getting passed through into price increases and we're seeing higher inflation? So I'd really be watching prices and wages above all else here.
Yeah, and John, in the weekend reading, for example, Dana Telsey on retail and on stores, she made clear the supply constraint is endemic to retail, and she says it goes right back to Vietnam, that Vietnam can't get the stuff to us.
You can pick up the data in China as well, Tom, going into the weekend and over the weekend. Lisa, downside surprise across the board almost. New export orders really disappointing too.
Yeah, and the idea of this Delta variant, when you talk about supply chain kinks, actually really matters when you talk about this, the staffers on shipping tankers, container ships, and the fact that you have new restraints, you have people who are getting sick and not going out. John, you do think, and you do hear in an increasing number of economist reports, that it doesn't seem to be taking longer than many people expected to work through this. When will this factor into the Fed's calculus?
So, Andrew, should they just pull back on QE? This was President Bullard. My preference would be to get to a decision in September, start sometime after that. My main goal would be to get it done by the end of the first quarter, just unwind the whole thing. Andrew, do you think that can happen? Do you think President Bullard and his argument can win over more and more people on the FOMC?
I'm not sure if they're going to be as aggressive as what Bullard is suggesting and really get out of asset purchases entirely by the end of the first quarter. But I do think that we're seeing a Fed that's moving a little bit faster, a little bit further to pull back on these purchases. And it really makes sense if you look at what's happened with the economy, what's happened with prices and inflation. This has all moved faster than Fed officials expected. And we had a rhetoric of FOMC rhetoric that was trying to kind of set up hurdles to pulling back on asset purchases, to eventually raising rates. And you're just getting through those milestones a lot faster than really anyone was expecting. So I think you do see a Fed that's increasingly moving faster here.
Andrew, from an economist standpoint, what do big negative real yields signal? Is it about the nominal yield, the inflation expectation, or the residual, the actual real yield?
So when I learned about real yields in graduate school, the idea of a negative real yield was almost something of a puzzle, because at negative real yields, essentially that's saying if you have any ideas for a productive project, no matter very productive, somewhat productive, it's more productive than negative. The return is more than negative. So you should be borrowing and you should be investing. So when you see a very negative real yield, it's telling you something about the equilibrium rate in the economy and maybe something concerning about the equilibrium rate of growth. Usually you think real yields are associated with real growth rates. If those negative levels of real yields are telling us about a growth concern, then that would be something I would take a lot more seriously. I think what we're seeing now, though, is just a shortage of safe assets, maybe some continuing concerns over what's going on with the public health scenario. And a lot of these things will be resolved over the next year or so. So I don't expect real yields to stay this negative, but it is a bit puzzling to see them here.
Andrew, before we let you go, I'd love to get your take on the infrastructure bill, whether that's currently being priced in. How much of an impact will the $550 billion plan have on economic growth, on inflation?
So it matters for growth, it matters for inflation. This is very, very different from what we saw from prior rounds of fiscal stimulus that were focused on individuals, that were very large and targeted in time as well as to individuals. So this would be $500 billion in new spending or $1 trillion in total spending over an 8-year or a 10-year period. So you're talking about, $100 billion, $200 billion a year. So it's not really a game changer in terms of the total amount of stimulus that's coming into the economy. And in terms of the market, I would just say, we're getting a lot of developments on infrastructure and some of those over the weekend, but I don't know that it's really shifted the base case. It's been the market expectation that we will get some new spending. Eventually through a reconciliation bill, we'll get some higher taxes as well. So I don't think that the market really has anything to respond to yet.
Just quickly, Andrew, what's the guess for Friday?
Friday, we're near the top end of the range. We think we get 1.15 million jobs. Part of that has to do with seasonal adjustments, so you have to be a little bit careful about interpreting the number, but we think this is really still a very strong demand side of the job market.
There we go. Andrew Hollenhorst, Citi chief economist, looking for something north of 1 million, Tom. 900K, the median estimate. The range 1.2 all the way down to 350K.
John, remember the last time we did this?
And the time before
we were
that.
talking
And
a
the time
million,
before that.
and it was like, oops.
It's been pretty decent over the last couple of months, though, Tom. We've had some robust jobs growth. We
it's
just need to see
different
a heck of a lot more of it.
Yeah, well, we've got 7 million minimum to bring up here. And again, labor force participation is that number, John. I would suggest on the way to that, we've got terrific sets of earnings. Look at the way the market opens up this morning. Small cap, I got up 1%. Almost 1% here with the move. It's a nice move. And, you know, I like the equity adjustment I'm seeing. People are moving their earnings guesstimates up.
Outside of equities, Tom, looking at foreign exchange, Lisa, the Aussie dollar stronger, even with that weaker data out of China.
Yeah,
we seem to be shaking that off, don't we?
You know, there's a growing number of analysts. If you take a look at the China strategy, especially with the tit for tat between U.S. and China, people looking outside of China, areas that saw contagion, looking to buy those. I wonder how much that's factoring.
A dollar weaker across the board here. We'll catch up with Michael Schowell on this in the next hour. Market Field Asset Management CEO from New York City this morning. Good morning. Alongside Tom Keene, Lisa Bramwitz, I'm Jonathan Ferro. Kicking things off this Monday morning with futures up 24, advancing 0.6%. From New York City, this is Bloomberg.
With the first word news, I'm Ritika Gupta. The U.S. Senate is on a path that could lead to a vote this week on that $550 billion infrastructure package. Negotiators finished the text of the bill yesterday, a crucial step towards eventual passage. Republican Senator Mitt Romney says neither side got everything they wanted after the Senate votes. Final congressional action wouldn't take place until the House returns next month from a recess. The U.S. has formally blamed Iran for a deadly attack on an Israeli-linked tanker off Oman. Secretary of State Antony Blinken says there will be a, quote, appropriate response. U.S. Navy experts say they believe the ship was struck by a drone, killing 2 crew members. Iran has denied responsibility. And North Korea warns that upcoming U.S.-South Korean military drills could jeopardize talks between the 2 Koreas. That raises doubts about a diplomatic breakthrough less than a week after both sides announced that communications would resume. Kim Jong-un's sister said the plan to hold annual allied exercises seriously undermines efforts to restore ties. And it's the biggest acquisition ever for Square. That's the digital payments platform led by Twitter founder Jack Dorsey. Square has agreed to pay $29 billion for Australian buy now, pay later company Afterpay. Square says it is capitalizing on a shift. Simone Biles will return to competition at the Tokyo Olympics. The American gymnastics star withdrew from most of her events because of mental health issues, but she will compete in the balance beam final tomorrow. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
I assume you have a lot of people saying the food isn't as healthy as they might want it to be. Is that the biggest challenge, or just growing the company?
Ray Kroc had a famous line, if you're not green and growing, you're red and rotten.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
I think you'll see text today, and by this evening, hopefully we can start the process, hopefully start our amendment process by tomorrow.
Wow.
We should finish up by Thursday, I hope.
And you think it will pass?
I do. Oh, absolutely, I do. Let me tell you, Jake, when you see Chuck Schumer and you see Mitch McConnell both voting for the same thing, it's unbelievable.
Senator Joe Manchin there of West Virginia speaking to CNN over the weekend. From New York City this morning, good morning. Alongside Tom Keene and Elisa Abramowitz, I'm Jonathan Ferro. Here's the price action this Monday morning to kick off the trading week. Going into payrolls Friday, your estimate 900K, your market up 23, advancing 0.5%. Into the bond market, 122.72, yields unchanged on the session so far. In FX, euro stronger, dollar weaker against everything in G10. Euro dollar 118.92, euro dollar stronger, positive 0.2% on that currency pair. Here's the line, Tom. Quote, when you see Chuck Schumer and you see Mitch McConnell both voting for the same thing, it's unbelievable.
It is, John. It's really extraordinary, and this is how the laundry is cleaned in America. 2,000 plus pages. Emily Wilkins joins us right now in the heat of this battle as well. Give us a vignette, if you will, Emily Wilkins, into what happens today. Does a congressman from Iowa say, if I don't get this, I won't vote for it? What actually happens now as the sausage gets made?
So right now you have a lot of senators who are not within that little negotiating group looking at the 2,702 pages of text that were just released around 9 o'clock last night, going over things, seeing if there are any sticky points there. The magic number is 60. Ideally, for Majority Leader Chuck Schumer, he'll have all 50 Democrats with him on board, and then an additional 10 Republicans. And you know what? This is, a lot of people are saying that this is infrastructure week, that this is a big week because it looks like the Senate is about to pass this package. I would say that we're still in the middle of infrastructure summer, because even if the Senate does manage to pass this bipartisan infrastructure package, something that there could still be a lot of roadblocks on, depending on what Republicans want to do with amendments, it still needs to get through the House. The House says that they need that $3.5 trillion reconciliation package, and that still has a ways to go as well.
Yeah, I'm glad you bring this up. Are the bills actually attached, or are they separate?
It depends how you want to message on that. Technically, they are two separate bills, but if you look at how the messaging around them has been, progressive Democrats said there's no way that they're going to vote for this bipartisan infrastructure plan if there's not that other package with other of President Biden's priorities in it. And so with that threat of a no vote from progressive Democrats, these two bills kind of have to move together. And that's how you see Speaker Pelosi talking about them. Chuck Schumer has to be a little more careful because he doesn't want to lose Republicans who don't want the packages to be tied together. So really, this is a messaging battle when you get down to it, as far as whether the two bills are connected or not.
Emily, there's also, and maybe this is just semantics as well. However, I saw that the House Speaker Nancy Pelosi would like to see some sort of Senate action on the $3.5 trillion plan that's going to go through reconciliation. Is that just simply taking it up? I mean, how significant does this action have to be in order to get some of the progressives to sign on to the $550 billion infrastructure plan?
So what progressive Democrats have told me that they want to see is they want to see the Senate actually go ahead and pass that reconciliation package. Mind you, that also means passing that budget resolution, which still is not done, but actually Senate passing that reconciliation package, getting that to the House, and then the House voting on that bipartisan infrastructure plan and reconciliation plan very close to each other. The concern with progressive Democrats is this: if they just vote on that bipartisan infrastructure plan, there's not going to be enough pressure on moderate Democrats like Kirsten Sinema and Joe Manchin to make some agreements and get through that reconciliation package.
Emily, there's one aspect of the 2,702 pages that's getting particular ire, particularly by Senate Finance Chair Ron Wyden. It's basically an extension of tax reporting rules to cryptocurrency brokers. What do we know about this and how big of a sticking point this is?
So we're still learning some details about it, but this was a solution that emerged the other week as a way to potentially pay for this legislation. And pay-fors, Lisa, they've been the biggest sticking point really throughout this entire process. And so we're going to be looking into and learning a little bit more about what exactly this provision does in terms of cryptocurrency and taxes on cryptocurrency brokers. And I think at this point there might be some concerns about how wide-reaching or not wide-reaching the tax is. And I think that's a debate that we're going to be hearing more of this week as more senators have the chance to look at the bill and talk to their counterpoints in the negotiating team about the bill.
I look, Emily, where we are on infrastructure, and I want to know what happens today. You've got 2,000 plus bills. Do the senators know that a certain bridge is going to be selected or not?
That's why the text has been so important. And that's why when you've talked to so many senators about whether or not they're going to support infrastructure, the first thing you hear back is, we need the text, we need the text, we need the text. I mean, Tom, look, we're less than 12 hours out from this big package being released. And so that is what we're going to be looking for today. When senators come back, when all of them come back to D.C. for that critical 5:30 vote, reporters will be there saying, what do you think? What are you hearing? And this is the point where if senators have an issue with some small thing in the bill, we'll definitely be hearing about it, because it really is a matter of getting all of the Democrats and 10 of those Republicans on board. And things, as we've seen for these last several months, can be very, very delicate when it comes to negotiations and getting people on board.
Emily Wilkins, thank you. Down in Washington, D.C., our Bloomberg government reporter. Lisa, how many people do you think have actually read this? 2,000 plus pages. Did you see the stack of paper?
Yes.
That was being carried around? Did you see the photos of that?
Yes.
Ridiculous.
It is ridiculous, and it is something that was assembled in days, and there's the expectation for a vote in the next week. But some of the specifics are actually really important, particularly from a market perspective.
Walk us through your highlights, Lisa.
I mean, honestly, if you take a look, and the reason why I was getting specific about it is because this is what people in the market are going to be doing. There is definitely something having to do with energy provisions, subsidizing everything from nuclear power plants to carbon capture and storage, electric buses. I mean, people are going to be looking at that kind of stuff. Also, low-cost internet access, that's a point of issue. Transportation, a big one. But you have to look at the energy, the concept of where is this money going to be flowing, John? And that's the specifics. Which regions are getting more of it? Who's getting pork? I mean, these are the things that people want to know.
I love the confidence you have in market participants that they'll be reading through this. Maybe their first-year analysts will be. Get your small violins out for the team over at Goldman. According to people familiar with the matter, first-year analysts at Goldman will now earn at least $110,000. Their second-year counterparts will be paid $125,000. First-year associates will go to $150,000. Just a $10K edge on rivals, Lisa, who have all come up to $100K. over the last couple of weeks.
Yeah, well, I mean, and honestly, people say, well, this is Wall Street, and oh, cry for them because they're earning so little coming out of school. How much did you earn coming out of school, John?
I think my first job here, if you want to know my first job here, can I reveal that?
Please.
I think it was about 20-something sterling, which I was very happy about.
Well, my first
in the
job,
early days.
Yeah.
I'm not sure I should be disclosing this, but I just have. Do you want to continue?
You never know, but my point being, it seems like a lot for an entry-level job, and it seems specific to Wall Street, but it's not. It's pretty much across the board. Salaries are going up.
I'm going to get a message from my manager in
Are
about
you?
3, 2, 1 that says something like,
Bingo,
do you want to go
there it
back
is.
to that? Futures up
Oh,
24.
John,
We advanced
the door's
5
opening.
0.6%. We've got to make up for the early years, guys. The bond market 122.72 from New York. This is Bloomberg.
If inflation did seem to be persistent, the Fed wouldn't hesitate to act, and that you have the tools to deal with inflation. What do you say to critics on Wall Street who say, yes, you have the tool to deal with inflation, you raise interest rates, and then historically plunge the economy into recession?
Yeah, that's exactly the kind of logic, I think, that you want to avoid, that you get too far out of alignment with what's actually happening in the economy, and then you really have to react more strongly than you'd like, and possibly causing disruption in the economy. So you don't want to be in that situation. I think the risk management here is that if inflation does come back down in 2022, we're in great position for that. We're exactly positioned for that. But if it doesn't, we're not in such great position. So I think for that reason, we want to have some flexibility on this taper.
Live from New York City for our audience worldwide. Good Monday morning to you. Here is the Monday morning price action. 6 months of gains into the month of August on the S&P 500. The S&P right now advancing another 0.6%. Outperformance on the Russell, the small caps up a little more than 1%. Bit of underperformance versus the small caps on the Nasdaq. We're positive there about 0.5%. The story on the session, not the story over the last 30 days or so. Switch up the board. You see the difference just in the performance of, say, the small caps down on the month and the Nasdaq 100 up on the month. A big spread. A lot of that performance came through the front half of July into the middle of the month. Towards the back end, we started to equal things out. We switch up the board again and get to the bond market. Through July, down 25 basis points on a 10-year. Right now, 122.88. Yields basically unchanged on the session on 10s, on 30s by a basis point higher to 190.64. And Tom, we come into a brand new trading month with very little consensus on what went right or wrong here. I'm not sure many people can get on the same page and explain that shift lower in yields we saw from the back end of Q1.
Nicely explained on yields with a 5-year negative real yield, negative 1.99. John, I want to go back to that wonderful board you had showing the difference between small cap and NASDAQ. That's a 400 basis point swing, I believe. And the interesting thing, John, is can you get out front on that and figure out what August will be?
I'm not even sure that's putting the right data, Tom. The swing might be wider than that. And the question I keep asking is a really simple one. What do you want to hold into year end? The Russell or the Nasdaq?
Exactly.
And when people answer that question, it does tell you a lot about what they think of the world and the data they're expecting on the macro side.
And what's so important on that, folks, is John gets out front of the toughest thing, which is to get beyond what's going to happen the first week of August or Jobs Day on Friday. Somebody who's expert at that is Howard Ward, trying to get out beyond the next quarter with Gabelli funds, and certainly I can say legendary in growthiness. Howard, let's look at the debris right now. 12 months trailing. A sophisticate like Howard Ward knows that's TMT. And the answer is the 12-month trailing numbers are a ginormous bull market, up 30% or so. How do you get out to your measurement of growthiness, Howard, in 2023, out 2 years?
Well, Tom, first of all, let me just say that the stimulus combined with the vaccination, to the extent that it's been used, and unfortunately it hasn't been used enough yet, have really combined to give us a very strong recovery. The GDP growth this year could be 7 or 8%. We haven't seen growth of that magnitude since 1951 when Harry Truman was president. Earnings expectations, which were high 2 months ago when I was last on your show, people were expecting earnings of about $182 on the S&P this year. That number is now about $193. And based on the numbers that were reported for Q1 and Q2, I think that number is still too low. It's probably too low by at least 10%, which means that the 2022 expectation right now is too low. That's at around $212. Right. So we have continuous several years of continued good earnings growth ahead of us, I believe. And so it is this, you know, in real estate, they say location, location, location. And with stocks, I would say earnings, 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 and the earnings outlook is rarely been brighter.
Howard, this is so important, and John brought it up, the idea of the NASDAQ outperforming. You've provided worldwide leadership on rationalizing these NASDAQ stocks out further. State the case now for owning those glorified revenue builders out 2 years, 5 years, 10 years.
So Tom, what's happened since I was on 2 months ago is inflation expectations, while they're higher than we would like, because of the Delta variant being introduced to the extent it has, interest rates have gone down. But at the same time, as I just mentioned, earning estimates have gone up. And when you look at the economic growth, as strong as it is this year, 7 or 8% GDP, it's probably more like 4% next year. We're already in an economy that has seen peak growth on a quarter-to-quarter basis and is beginning to slow. Slowing growth is generally a good environment for growth stocks. And when you get beyond next year, we're probably going back to GDP growth that has a handle on it of about 2%, simply constrained by the limits of the increase in the labor supply and productivity growth.
Howard.
And so slow growth whether it's slowing or slow, these are good environments for growth stocks.
Howard,
and so the present value of those future earnings remains high.
there's a question also about whether they're a monolith, right? We always talk about the FANG stocks as one entity, and yet we've seen a lot of divergence within the recent earnings and the outlooks. For example, the likes of Alphabet, Google's parent company, seeing ad revenue really picking up, whereas the likes of Amazon seeing a lower sales estimate. How much do you expect this bifurcation to continue of the haves and the have-nots within the growth world?
Well, you know, it's a little bit tricky right now when we look at the numbers because you have companies like Amazon that are growing free cash flow like few other companies. In fact, the FANG stocks in general are among the greatest free cash flow generators of all. And the market in the last 2 months in particular, as rates have moderated, has been rewarding free cash flow more than anything else. In the first quarter, it was really rewarding earnings estimate revisions, positive revisions. Last year, it was sales growth. Right now, it's free cash flow growth. And so many of these growth stocks and all of the FANG stocks, including Netflix, although they were free cash flow last year, probably not this year, but they will get on a permanent trajectory of free cash flow growth next year. These are wonderful places to go. And in the case of Amazon in particular, you know, bear in mind, the company is up against monster comparisons. And Amazon has become Amazon because of Jeff Bezos' willingness to sacrifice short-term profit for long-term gain. He's become the richest person in the world following that strategy. And in the case of Amazon, they have investment cycles. They keep investing to give the consumer a better experience. And that has been a successful formula, and it is continuing to show the way for Amazon's future growth. They remain the leader in e-commerce, they remain the leader in web services, and they have a rapidly growing digital ad business, which puts them up there in the, you know, as number 3 behind Google and Facebook.
Yeah.
So free cash flow growth right now is the primary mantra, and I think really all the FANG stocks and so many other these software and even semiconductor type companies are generating this, and this is what really gets us excited.
I gotta say, Tom, as I hear Howard talk, I think about the case for growth, the case for buying stocks that look expensive for people who say are in triple leverage all cash, who might not have been in this.
You know, that's been the Howard Ward mantra for years, and goes to Mario Gabelli and Howard Ward saying that growth is the new value. What's the value trap right now, Howard Ward, out to that 2023? What's the trap you see?
Well, you know, I think that the market got very excited about the potential for cyclical earnings growth, and I'm not saying that has gone away. It's simply that, and so you had stocks like Caterpillar, for example, which should be an obvious beneficiary of the pending infrastructure package, and also benefiting from the reopening trade and booming housing markets and construction. But yet the market had discounted that. And in fact, it's a good point to mention that as we saw with this most recent batch of earnings, whether it's Amazon or some of the others, the market has discounted significant earnings growth. But my perspective is it's still not where it should be. The earnings expectations are still too low for the market overall. But when you look at some of the cyclical names, particularly now with COVID striking us again, some of that cyclical fervor is going to come down, and some of that reopening trade in hospitality might be put on hold. And so I'd be very careful with a number of those stocks, whether they're transportation or hotel, restaurants. I think you have to be very careful there, because while I don't think we're going back to a base case of any kind of a countrywide lockdown on a regional basis or on a state-by-state basis, that's not so certain. And this is a problem, and the risk has risen because of the failure of more people to vaccinate. And I have to say that the TV personalities and politicians that have discouraged the vaccine and are continuing to discourage mask wearing are doing a real disservice to this country, and it's costing us illness and lives. And those people need to be held accountable.
Howard Ward of Gabelli Funds. Howard, thank you, sir. As always, good to catch up. We'll continue the conversation on the pandemic with Johns Hopkins in just a moment. Your market shaping up as follows: up 23 on the S&P, up 0.5%. The deal of the morning was actually down under. Square buying Australia's Afterpay,
what do you think?
Buy Now, Pay Later firm, for $29 billion. What do I think? Square is worth more than $100 billion. And let's be clear, when it comes to the likes of Square, if the money's moving, Tom, they want to be there. And this is a part of the ecosystem where the money is moving.
You just wonder when the cash moves. I mean, these big tech companies, John, you go, well, they ought to buy Square, but that was like, what, a story from 4 years ago?
Well, Credit Suisse is 25 billion Swiss, Tom. And you've got Square that's north of 100 billion US.
Now, this is the growthiness Howard Ward's talking about.
These banks missed the window, Lisa, to get those kind of deals done.
Yeah.
Square's getting bigger.
Square's getting bigger, and it's interesting to see where they're getting bigger. And frankly, it actually challenges the big bank mainstream bread and butter of how they make money, which is basically buy now, pay later, and do it for a lot lower interest rate than, say, a credit card. This is the new model of credit.
It's taking out the credit card.
Exactly. It's taking out the credit card, which is one of the main streams of revenue. So even though Square paid a pretty hefty price, according to a lot of analysts, this does really threaten the preeminence of Wall Street.
For the youth on Wall Street that only earn 100K a year and maybe can't get a credit card, Lisa, this is a great setup for them, isn't it?
I think I have
they
one
can do
for you.
The pay now, later. Look, Tom, Square's getting ahead of this. The new generation, the way they use money, the way they spend money, not with credit cards so much anymore. That's the approach.
No, it's flipped on its head. There's no question about it, John, and you see that. I see it top to bottom in retail. Dana Telsey and others have talked about it. It's a complete new world for the banks.
Square down a little more than 4% in the pre-market. Deal of the morning. Square to buy Afterpay for $29 billion in a bid to tap younger users. Did I say after? You say after. After. We could do a lot more than this, couldn't we? Tomato.
You say tong, I say tang. I mean, it's all there is to it.
Up 23. We advance 0.5%.
Did you watch Ted Lasso?
I did not.
Damn.
This is Bloomberg.
With the First Word News, I'm Rich Gupta. The U.S. Senate is on the verge of giving President Biden a big win. Lawmakers are heading towards passage this week of a $550 billion infrastructure bill that would provide the biggest infusion of federal spending on public works in decades. The money would fund roads, water projects, the power grid, and a lot more. The bill would still need to be passed by the House, which won't take it up until next month. Minneapolis Fed President Neil Kashkari warns that the spread of the Delta variant of the coronavirus could slow the labor market's recovery. Kashkari told CBS it could keep some Americans from looking for work. He says the U.S. is about a third of the way back from where the hole was back in December. The securities regulator in China is calling for talks with its American counterpart on overseas IPOs. Last week, the Securities and Exchange Commission increased disclosure requirements for Chinese companies that want to list in the U.S. That came in response to Beijing's clampdown on the private industry. And HSBC has joined its British peers in releasing loan provisions it booked in the early stages of the pandemic. That boosted quarterly earnings that easily beat estimates. Europe's largest lender also said it will pay an interim dividend of 7 cents a share. Last month, the Bank of England removed curbs on cash payouts. Goldman Sachs has become one of the last big Wall Street banks to raise pay for junior bankers. Bloomberg's learned that first-year analysts will now make at least $110,000. Pay for first-year associates will rise to $150,000. Goldman's own analysts made a presentation revealing their crushing workloads. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rich Gupta. This is Bloomberg.
ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Some of the best deals in history have been passed on by a very large number of people. The money is made on the aberrations. And so I would say you want to be generally open-minded and humble about your conclusions about what all these different signals mean.
Up to Maine and had a lobster. And it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astacoma carinata.
I nailed it.
It's not thera, whatever. Astacoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
For the people here on Earth who are wondering, why are we investing all this money in space, this time in space, talk to us about how you believe this will actually help benefit us here on Earth.
We're building infrastructure. This is a road. We're building a road to space so that future generations can build the future. We live on this beautiful planet. It's the most beautiful planet in the solar system by far.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We're looking not, I believe, to lockdown, but we're looking to some pain and suffering in the future because we're seeing the cases go up, which is the reason why we keep saying over and over again, the solution to this is get vaccinated, and this would not be happening.
Dr. Anthony Fauci there speaking to ABC over the weekend. From New York City this morning, good morning, alongside Tom Keene and Lisa Brambitz, I'm Jonathan Ferro. This Monday morning, here is the Monday morning price action on the S&P. 6 months of gains. We add a little bit more weight to it, up 23 on the S&P. We advance 0.5%. Yields unchanged on a 10-year at 122.55 through foreign exchange. Surprising to see the Aussie on top, a stronger Aussie in the mix, even off the back of weaker than expected data out of China. Euro dollar also stronger euro, 118.89, dollar weaker against everything it seems this morning. Euro dollar advancing, Tom, 0.15%.
John, let's touch that briefly. What's the significance of a 119 euro? I would suggest a 119 euro is maybe the old 121 euro.
I just want to try and work out, Tom, how the dollar trade lines up with what happens in the bond market and how the bond market moves line up with what happens with the economic data. And on the latter point, I have no idea.
Well, we'll get to Friday and jobs report. We begin 3 days of coverage here on Wednesday, ADP, then claims, and then jobs. Right now, and this is so important, what did you do this weekend? Which beverage of your choice did you have? Which fancy restaurant did you go to? Or did you speak and do? Joshua Sharfstein is expert at the doing of medicine with Johns Hopkins Bloomberg School of Public Health, one of our leading experts on this pandemic. And he was out at 3400 Annapolis Road, I should say, in South Baltimore, getting 76 vaccinations done. Dr. Sharfstein joins us this morning. Describe the tentativeness, the fear of people getting vaccinated this weekend, Dr. Sharfstein. What is the character of their reticence and their courage to get vaccinated?
Well, I would say that a lot of the people who came this weekend had heard about the Delta variant. They knew people who'd gotten sick, and they were there. They came early. There was a huge surge early, which really, to me, makes it seem like people really want to make sure when they show up, that they're going to get vaccinated. And then there are people who you could tell were reluctant, and I'll ask them, what made you change your mind? Because you could have gotten vaccinated earlier. And usually they don't give an argument, they give a person. They'll say my wife, my girlfriend, my brother, my boyfriend, my husband, and they're talking about somebody who really cares about them. And we've got to hope that people will listen. Maybe they won't listen to every expert, but they'll listen to their friends and family who are urging them to get vaccinated.
What incentives can jumpstart this? Do you believe in $100 per vaccine? Or how about, I'd say an incentive would be Baltimore Oriole tickets, but maybe that would keep them away.
Yeah, that probably wouldn't be at the top of my list given how they're doing right now. But, you never know. I would say that, this is not exactly a public health determination. It's sort of behavioral economics, what would really make people change their mind. And it's obviously a combination of incentives and standards, standards and expectations for what people should do. And for some people, there'll be some requirements. In Maryland here, all the hospitals, the universities like Johns Hopkins are all requiring a vaccination for people who can get it. So it's a combination of things, I think, that's going to move the needle. But I do think that the Delta variant, the surge in hospitalizations, the surge in deaths, all these stories about people regretting not being vaccinated, when it's too late for them to get vaccinated, is having an impact here.
Dr. Sharfstein, let's not talk about behavioral economics for a minute. Let's talk about the science of the Delta variant and what the vaccinated individuals can count on in terms of protection. We got a study out of Israel this morning showing that about half of all diagnosed cases of the Delta variant of COVID were among people who are vaccinated. What's the latest on how well protected you are from infection, how well protected you are from transmitting the virus if you are inoculated?
So I think the best way to think about the vaccine is it's like an umbrella. This is not an analogy I came up with, but I like it. It's like an umbrella, and if you have an umbrella, it's not raining that hard, and you're not outside for too long, you're going to stay dry. On the other hand, if you're outside for a long time, if it's a really bad rainstorm, then you could still get wet. And the situation here is that when people are exposed to an enormous amount of the Delta variant, they can still get sick. It's much more likely to be a mild illness. But if they are inside without a mask, at a bar, those kinds of situations, it's possible. And you're going to see more breakthrough infections the more Delta variant that's out there. Israel's a hard situation because so many people are vaccinated, so you would expect a greater proportion of breakthrough infections to be among the vaccinated. In the United States, we haven't seen that because we have so many people unvaccinated. It really depends on the intensity of your exposure. So someone wearing a mask, going to the grocery store, I still think very low risk.
What's the timeline in terms of younger individuals going to school, getting vaccinated? I'm not asking from a self-serving perspective.
No, you wouldn't be.
My kids might be heading back, and one of them might not yet be eligible for vaccination.
Well, it's a question right now because my understanding is that the FDA has asked for larger studies. And so it's how quickly those can get, enrolled and the answers can come. And if they're looking for a couple months of safety data like they were before, it'll be, a couple months. So I would expect it'll be at least into the fall.
Joshua Sharfstein, good to catch up. Doctor, thank you. Bloomberg School of Public Health Vice Dean. This from President Kashgari over the weekend on Face the Nation, echoing some of those concerns, Lisa. Quote, I was very optimistic the fall would be a strong labour market with many of those Americans coming back to work. Still his base case, but he goes on to say, if people are nervous about the Delta variant, that could slow some of the labour market recovery. That would put some emphasis again on the September data, which for much of it you'd have to wait until October to get. So this could be a while.
Yeah, and this actually goes to the expectation that it's not going to be until December that the Federal Reserve is going to announce tapering. I do wonder if September is the right date at this point, John. If people are concerned about spreading the Delta variant to unvaccinated children at home, how this changes the equation. I mean, really, that is significant for a lot of people.
If you'd sit in the housing market, you'd think everything else was okay, wouldn't you? If you just sort of woke up after the last 2 years, you'd think everything was great. Front page of the FT Tom. Pandemic fuels broadest global house price boom in 2 decades. Second paragraph. Of the 40 countries covered by OECD data, just 3 experienced real-term house price falls in the first 3 months of this year. That's the smallest proportion since the data series began in the year 2000. These housing markets worldwide are on fire, big time.
They're a tangible asset. I mean, they just simply switch out in from equity markets and all that into, where you're going to put your money, you can leverage up in housing. So, I look at the housing market as actually pretty stable. What I would say, John, is we're back to year-over-year gains that we saw in 2006. And anybody with a collective memory was going, how long can that keep up?
How long can it keep up? Yields on a 10-year right now, 122.55. In the equity market, we advanced 22 points. On the S&P 500, positive 0.5%. Dollar is weaker this morning against everything in G10. Euro dollar 118.91. That currency pair advancing 0.2%. What did you want to get? Long euro?
No, I just
the equity market.
It's my entry point on dollar. I've got to wait for a dip. I'm going to buy the dip.
You wait, Tom. Alongside Tom Keene and Elisa Bravitz, I'm Jonathan Ferro from New York City this morning. Good Monday morning. This is Bloomberg.
Navigating what seems to be a really tough situation better than almost anyone else.
We've worked hard on the supply chain. There's no question there's a lot of work to do in the supply chain for semiconductors. And we're happy that we were able to exceed our second quarter guidance as well as, guide up for the rest of the year.
The curtain will rise again.
Broadway's returning June.
Have you bought tickets?
It's busted out.
You've got more time here.
Commodities are up.
Keep going.
To the moon.
Beautiful.
Bloomberg Surveillance, weekday mornings on Bloomberg Television and Radio.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We are looking for a pretty significant deceleration as we go into 2022.
The growth is going to be strong, just not as strong as the first half.
As we go forward here, I think you potentially could see some more bumpiness.
We're still getting some very high and potentially very concerning inflation readings in the near term.
I think we're heading to a transition, one ultimately that will create a stronger dollar.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Let's get the week started from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your equity market off session highs advancing 14 points. We're up 1/3%. Tom, pushing ahead to payrolls Friday.
Well, into August and into that jobs report, and it is a linkage, John, of our economic belief in August and, frankly, January of next year with our market belief. And they're really bouncing off each other within the research notes as we begin the month.
Can we take a beat to have a shout out for Italy, Tom? Won the Eurovision Song Contest, won Euro 2020. Then the Italian is the fastest man on the planet in the 100-meter sprint. And then the 2-year yield right now, record low in Italy of negative 0.465%. I just wanted to take a moment, Tom, just to.
I think we should extend this moment here and suggest what AC Milan looks like into 2022.
Let's stop that right there.
Well.
Lisa, 900K is the estimate this Friday. The range is really wide for payrolls.
I was going to say correlation or causation, and that was a really nice slip in to try to move on quickly and get it out of the way. Yeah, the jobs number is going to be really key. And the question I have is how much slack really is there in the labor market? We know that the demand to hire is there. The question is supply. The question is whether we've seen the kinks worked out or whether we do have to wait till September, John.
September is the month for so many people at the Federal Reserve. Let's get to the price action this Monday morning. Good morning to you all. Equity futures on the S&P 500 shaping up as follows. We advanced 16, up by 1/3%. Into the bond market, yields unchanged at 122.38. If you're just waking up, have a sneak peek at the FX market. Dollar weaker to kick off the month of August. Dollar weaker against pretty much everything, with the exception of pound sterling at the moment. The commodity currencies on top. Norway, the Aussie. Really surprising to see the Aussie dollar doing well despite that weaker than expected Chinese data, Tom.
John, what's so important, I'm glad you bring this up because Michael Schull is going to talk about volatility here. But John, I wonder if the mystery of August is going to be dollar volatility. That hasn't happened.
We can get our teeth into that in a moment. Lisa, euro dollar 118.91. We advanced there 0.2%.
Yeah, one of the key questions behind all of the potential volatility is inflation, and we're going to get a read on certainly what manufacturers are seeing with the U.S. July ISM manufacturing data expected out at 10 a.m. Really, the key question to me is how much are prices rising? We know they are rising, but they have continually beat to the upside when it comes to how fast inflation has been. How long can we talk about the T word, transitory, or does it start to become something else? 12 p.m. at noon, the Senate reopens and resumes infrastructure bill consideration. They do have that 2,702-page document to look at, to start amending, to start haggling over. The details are fascinating. I have not read them all, but I'm sure that somebody out there has. And the key question is, can they get this passed this week and then get it over to the House? And what does the House do with it? And then at 3 p.m., the Center for Strategic and International Studies, CSIS, is holding a fireside chat with Anthony Fauci, Tony Fauci, the National Institute of Health Director. Key question I have is, again, what's the threshold for potential lockdowns? He says that's off the table. Okay, well then what about masks? What about mandating people back to work? How do we move this forward when the Delta variant has clearly shown itself, John, to be somewhat of a different animal than the rest of the COVID strains just by virtue of how virulent, not just virulent, but how quickly it spreads and how much it's even infecting vaccinated individuals.
Yeah, Lisa, thank you. I think it's worth saying, Tom, worth pointing out that we saw a shift at the back end of July. Last week, a real shift where private companies, big corporations started to push a little bit harder to get their staff vaccinated, those that haven't been, and some pushing back the return to office as well by about a month.
That's true, John, but I would suggest this weekend was a game changer within the pandemic, and with the one exception, the school thing we talked about in the last hour. There was a lot of research on the hysteria that's out there versus the science that the experts are talking about.
Joining us now is Michael Schull, Market Field Asset Management CEO. Michael, I want to start with the inflation story that Lisa touched on just briefly. This market doesn't seem to be too concerned about it. Are you concerned that this market is not concerned about it?
Well, I think it will be at some point in time. I mean, you just talked about the Italian yield at minus 45 basis points, and it's impossible to remember what it was like, what it was like 10 years ago. I think it takes markets a long time to realize that something really fundamental has changed. Right now, I think you are seeing, not just inflation data, but you are seeing inflation present in virtually every corporate earnings call that you hear about. It's fairly benign for the corporate sector because, at the end of the day, prices are being pushed onto the customer, whether it's another corporate customer or the consumer. I think the difficult period comes when either the consumer pushes back, in which case, I think you'll have a collapse of confidence in corporate earnings, or alternatively, when the central bank, finally feels the need to actually do something about it.
Michael, do you care about overnight reserves going through $1 trillion? If you look at the confidence in the Fed, the confidence in that short-term trust money, is it a big deal to you with your inflation prediction, your volatility prediction, to see $1 trillion overnight reserves?
Yeah, it is, but for a slightly different reason. It's not about confidence in the Fed. It's just another sign that this monetary policy is somewhat out of control. So, you have a strange situation where, you're buying $120 billion worth of bonds from the market, and then the market itself goes and puts the money back in the Fed. So right now, we have more than 8 months worth of QE sitting back at the Federal Reserve. And it's a very interesting philosophical question whether in fact QE actually exists if 8 months worth of bond purchases are simply sitting within the Federal Reserve. My sort of big take is it's just a sign that the numbers have really got too big, that this is a policy which has far outlived its usefulness, and that the unintended consequences of this period are going to be significant.
Michael, when are we going to start to see the inflation data that will convince markets that perhaps it's something beyond just transitory?
Well, I think we had a new definition of transitory from Jay Powell this week, which is something which lasts for a really long time. And then what he did say thereafter is what he's really concerned about is a relationship between wages and prices. And I think that's a reasonable statement. It's a reasonable statement to make. If we start to see clear evidence from corporate America that workers are demanding and getting higher wages, and that inflation is the sort of psychological, reasoning behind that. We see it right now certainly in sort of high-level white-collar pay is certainly accelerating at this point. Well, then I think you have everything that anybody who should be concerned about inflation would be looking for.
Michael, with that in mind, what do I want to own right now? What is it? Metals, miners? Where do I go?
Yeah, I think you want to own the people which are in control of prices, and I think that the miners are in control of prices. I think you're going to have a very interesting battle with China, which is clearly trying to talk down the price of industrial metals. I don't think they'll be successful doing so. I think the demand is global enough this time. Energy demand seems to be getting close to supply. Again, that's going to be interesting, and thus far, the makers of things, the industrials, seem to have pricing power. So I think all of those look interesting.
What do you do with large cap U.S. equity, Michael? This part of this prescription here is to own America and to own big cap stocks. What do you do with them?
I think it'll work as long as technology continues to perform. Again, if we look to China, which is a market dominated by tech, and the effect of Chinese tech going down on the emerging market index, you see what the basic, on the one hand, the opportunity in the US, on the other hand, the risk in the US. As long as technology is good, the S&P is going to be a very hard index to beat. The minute that technology is not good, the S&P is going to be an incredibly unfriendly index for however long technology isn't good. So, right now, people still like tech. It's still delivering fantastic earnings. I wouldn't say its earnings are better than expectations anymore. But, forecasting the demise of this technology bull market is very difficult.
Really tough. Michael, we've got to leave it there. We've got to run. It's got to catch up, as always. Michael Shao, Market Field Asset Management CEO. Need to work out how this slowdown in China develops and what it means for this market. We had Damien Sassower of Bloomberg Intelligence on air a little bit early this morning.
He was on earlier this morning? Really?
These stats, Tom. China makes up over 25% of all dollar-denominated EM bonds, trading above 7%. It makes up 2/3 of the distressed EM universe. Got to pay attention to these things as they continue to develop, Tom.
And what's really important here, John, particularly for people older, is the Pacific Rim finance is different than what we were trained on. It is radically, radically changed with that China focus. John, I think it's important to do an Italian block.
I think we're running out of time, Tom.
I think we did an Italian block here. And I'm sort of blown away that Oliver Giroud went, the French giant from Grenoble.
Giroud.
Yeah, Olivier, whatever. To me, it's Oliver, whatever. But, you know, that he went from Chelsea to AC Milan, frankly, is actually a big deal, isn't it?
We're still in the business to get a few more players. I won't have a call on the season ahead of us, Tom, until we settle our transfer
We're in the
business
friendlies. I
for the
mean,
next
they did
couple of
well
weeks.
against Nice. 1-1.
1-1. I saw that. And Giroud scored in the first couple of minutes, didn't he?
Yeah,
I'm
he's
pleased
a
you read
machine.
in. I'm pleased
I read
you read
it.
in.
I read
wanted
it.
to get Lisa's reaction to that data out of China too. So I'll repeat that if you didn't hear. Those two stats that come from our team at Bloomberg Intelligence, 25% of all dollar-denominated EM bonds trading above 7%, Lisa. That's quite a number, making up 2/3 of the distressed EM universe. China, China, China.
Oh, is this China?
Yeah, well, and you see actually defaults creeping up because you see the authorities in China allowing it to happen, trying to create more of a capitalistic kind of society that way. But really, do people want to own China at a time of such regulatory uncertainty, which is a reason why some people are saying you're seeing increased buying in places like Australia and increased buying in places that might have gotten beaten up slightly in the wake of weaker Chinese data because it is more dependable from a regulatory standpoint. Kind of an interesting trade.
Damien went back to 2015. I think it's important to recognize that back then when we had those huge routes, the currency was not stable. This time around, the currency is stable. That maybe gives some people, Lisa, some confidence to go back in.
Perhaps, although into China, it's a question with the regulatory aspect as well.
We'll talk about AC Milan another time. I'm feeling a bit nervous about the season ahead. Up 17 on the S&P, up 0.4%.
Be a Red Sox fan.
From New York City. Aren't you doing well this year?
No, we're not. The Yankees are on a tear.
Are they? I thought the Yankees were terrible.
The Yankees were. Trade deadline. They rocked it.
Okay. Do you want to talk about that later?
Later.
Okay.
I'm screaming.
All right, take a deep
Dreaded
breath.
Yankees.
You're screaming most mornings. Up 0.4% on the S&P. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The U.S. Senate is on a path that could lead to a vote this week on that $550 billion infrastructure package. Negotiators finished the text of the bill yesterday, a crucial step towards eventual passage. Republican Senator Mitt Romney says neither side got everything they wanted after the Senate votes. Final congressional action wouldn't take place until the House returns next month from a recess. The U.S. has formally blamed Iran for a deadly attack on an Israeli-linked tanker off Oman. Secretary of State Antony Blinken says there will be a, quote, appropriate response. U.S. Navy experts say they believe the ship was struck by a drone, killing 2 crew members. Iran has denied responsibility. It's the biggest acquisition ever for Square, the digital payments platform led by Twitter founder Jack Dorsey. Square's agreed to pay $29 billion for Australian buy now, pay later company Afterpay. Square says it is capitalizing on a shift away from traditional credit, especially amongst its younger consumers. Simone Biles will return to competition at the Tokyo Olympics. The American gymnastics star withdrew from most of her events because of mental health issues, but she will compete in the balance beam final tomorrow. Biles won the bronze on the beam 5 years ago in Rio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
What you said was we need to make them in America. Does that include overseas companies making them if they have the plant in America?
I would certainly be in favor of them having operations in America, absolutely. You know, Samsung, TSMC, there are companies that are in allied countries, and you know, we certainly want them operating in America and producing chips in this country, yes.
So we have a significant chip issue, but there are other supply chain issues as well. As I know you're monitoring what's going on. Where have you seen other problems in the supply chains right now in the United States that need to be addressed?
Particularly in home building supplies, you know, lumber and all the related supplies, glue, adhesives, and you see it playing out. You know, home prices are high. If you go to Home Depot or Lowe's, you'll see prices are a little bit high. So, and that's all because of the lack of supply, just disruption.
I assume you have a lot of people saying the food isn't as healthy as they might want it to be. Is that the biggest challenge, or just growing the company?
Ray Kroc had a famous line, if you're not green and growing, you're red and rotten.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
I was very optimistic the fall would be a very strong labor market with many of those Americans coming back to work. That's still my base case scenario, but if people are nervous about the Delta variant, that could slow some of that labor market recovery and therefore be a drag on our economic recovery.
That was President Neil Kashkari on Face the Nation over the weekend from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. And before we get a market check, let's just sit on that quote from Kashkari there, Tom. I think it's going to be really difficult to get the numbers lined up for the September Fed meeting if many of the officials over at the Federal Reserve want to see the September data first.
Yes.
So if you want to see the September jobs data, just to state the obvious, you've got to wait until October to see how that pans out.
Well,
maybe we get a better feel for it through September. Back to school, return to work. I don't know, but it's going to take a while to find out.
They have stated this, John. I've brought this up time and time again. They are as ex post as they've ever been. They're going to wait till after the fact. John, November 3, December 15th. How about you go to January 26th of next year?
Oof. Makes you wonder how relevant the August data is, Tom, as we go into July payrolls this coming Friday. Here's your equity market on the S&P up 20. On the S&P 500, we advanced by 0.4%.
Yeah.
The Nasdaq looking okay, up 0.4%. The Russell looking better in the FX market. Euro dollar 118.92, positive 0.2%. A weaker dollar through G10 this morning. And on the 10-year, up about a basis point now, Tom, to 123 on 10s.
Oh, we got a lot of ways to go here. We'll continue on the interesting Monday morning here, the beginning of August, and we begin at the White House with our Mario Parker, our White House reporter. Excuse me. Mario, I want to know what this administration's plan is, their cogent plan on the virus and masks this morning. I can't figure it out.
No, Tom, I think that's the conundrum that this White House finds itself in, right? If you think about it, less than 4 weeks ago, we were celebrating our freedom from the virus here at the White House. Our lawn and the barbecue, sans mask. The carrot to most Americans to get vaccinated was the fact they didn't have to wear a mask. Last week, there was this about face, if you will, with the CDC issuing new guidelines.
Well, within that, Mario, is science. So there's a place of science within the previous administration, the place of science within this administration. How does science fit into the day-to-day battle at the White House?
Well, this White House, as painful as it is, they'll concede that they're going to be led by science. Now, science may not always align with their political aspirations. Joe Biden campaigned on saying that he would tell the hard truth, that he would listen to the scientists and the experts, and he's doing that right now, though it does put the White House in a tough position politically.
Mario, I love that. Science may not always comply with political aspirations. There is a question here of what the likely path of the scientific recommendations will be. Is it just going to be mask mandates? Will it be federally? Is it for everyone? And for how long?
Yeah, it looks like as of right now, it's the mask mandate, at least for right now. President Biden, as he was leaving the White House last week without giving much detail, said that other restrictions are likely to come, particularly if people don't get vaccinated. He didn't give details as to what those restrictions would be, but the likelihood, Dr. Fauci yesterday said that the likelihood of like mass restrictions vis-a-vis what we saw last winter are very unlikely. There are enough Americans to kind of vaccinated to kind of stem that type of trend.
Has some of the dissonance over the mask mandate trickled into infrastructure talks or the support that President Biden has from members of both parties?
No, this is the one bright spot in a rough 8 days or so for the White House. As we mentioned last week, they were, in some regards, it seemed as though they stumbled with the handling of the Delta virus. There was the eviction moratorium that caused some intra-party finger-pointing. But the infrastructure deal seems to be the one bright spot that the White House has right now. It's a big win for the administration.
Mario, how do they link infrastructure together with the two bills? In our earlier conversations this morning, that seems to be the raging battle for the president's left.
No, absolutely, Tom. As you mentioned, this is going to be the kind of the tightrope that President Biden has to kind of navigate here in the coming weeks, right? While he has a win with the infrastructure, one of the centerpieces of his presidency, he does have to keep that left flank on board, and the only way to do that is to go through to pass his so-called care economy package that progressives like, to keep them on board with his bipartisan infrastructure bill right now.
Scathing comments going into the weekend from Congresswoman Alexandria Ocasio-Cortez, saying the following: now we're scrambling, but it could have been avoided with better communication and, frankly, more forthright leadership from the White House. That was on evictions, Mario. Can you walk me through what happened over the weekend and what on earth happened with this?
Yes, there was a lot of finger pointing toward the middle of last week. The White House knew that this was coming with the Supreme Court decision previously. And so the White House tried to speed something through Congress that put the heat on the House. The House wasn't able to do anything with such short notice and made sure to mention that the White House gave them such short notice. And now, as you mentioned, Jonathan, you've got Alexandria Ocasio-Cortez on the leftward flank criticizing this White House for its handling of this eviction moratorium.
Not good. Mario, good to see you, sir. That's for sure. As always, Mario Parker, Bloomberg White House reporter. Mario, thank you. Those numbers from the Census Bureau survey that we quoted going into the weekend, Lisa, worth quoting again. An estimated 3.6 million households who've fallen behind on their payments are somewhat or very likely to face eviction over the next 2 months. If this expires, it has expired. About 7.4 million households are behind on rent in total. They are staggering numbers.
And it's not evenly distributed. If you take a look at the different regions within the United States, the South actually may be hardest hit by some of these evictions, which is interesting from a political standpoint. In addition, just from a human standpoint, is how much trauma might be more concentrated. But how this will play out for President Biden heading into the midterms.
Just didn't get an answer to that over the weekend, did we, Lisa?
No.
Why did they wait so long to ask Congress? I just can't get my head around that.
They're really
the day before.
Yeah, there was no answer, not that I could tell, in terms of why it wasn't more on their radar. They did say that the administration did say they had been discussing it behind closed doors, and yet the urgency seemed to not be there.
Speaking of urgency, Tom's itching to get some breaking news, Lisa. So give him 30 seconds.
Go ahead.
Breaking news out of the UK, out of England, Tom, out of North London to be precise.
Yeah.
Harry Kane hasn't shown up for training, apparently.
Yeah.
He was due to return this morning following a short holiday, and he hasn't turned up for training.
What's
So
that mean, John?
your Spurs might lose your Harry to Manchester City.
I've been off my
Tom.
game today. I'm so worried about this.
I can tell. I can feel that.
You know,
The off the game part. I just didn't know why.
he wants to go to one of the Manchester teams, right?
Manchester City apparently in the mix.
So he's going to go to Manchester City with Jack Grealish, right? You're going to have
possibly.
Grealish and
Well, we've got to
Kane
see if
playing
Grealish
together?
leaves Villa.
Who has
That's
all
the
that
transfer
money?
talk.
Where's Man City's money to afford that?
Not from England, Tom, from the Middle East. That's where the money's coming from. A lot of the money, anyway. And now they're a big club. They're getting a lot of revenue too. It's un-British.
It's like un-American. It's just un-British.
Yeah, you can say that. I won't.
Okay.
Tom Porcelli's going to join us on The Economy. RBC chief US economist coming up very shortly as we count you down to payrolls Friday. A ton of Fed speak, a divide between Governor Brainard and President Bullard. Who wins out? That's an important question from New York City this morning. Good morning.
We hardly knew you.
This is Bloomberg Surveillance.
you assess the sector as a whole? Is it making a better case for itself at the right price at this point?
Most of the big hedge funds, most of the people that have been growing, have been delivering very good performance. We have, but so is a number of the peers. You know, it is definitely the hedge fund business is getting more about the large getting larger and generating more performance, being able to hire the best people, thereby generating better performance, thereby getting larger. So when you look at the performance of the largest, say, 20 or 50 hedge funds, the performance has been pretty good over a number of years, and the inflows have been pretty good. You know, this is another quarter of positive inflows for us. I think one of the bits you're seeing at the moment is every client is worried about inflation. When they say they're worried about inflation, what they really mean is, I own a load of bonds, is that going to cause me a problem?
York City for our audience worldwide on TV and radio. Good morning to you. Here is your Monday morning price action. On the equity market up 17, we advanced 0.4%. Similar move on the Nasdaq 100. On the Russell, some outperformance up 0.8% after some underperformance through the month of July. Hello, August. Switch up the board and get to the bond market. Speaking of August, we leave behind a 25 basis point move lower on a US 10-year in July and come into August with a broken consensus. Morgan Stanley coming out with their call. They think we've cleared the decks here. This is a market that will be more sensitive to better data, both inflation higher and jobs data more robust. Their call 160. This market 122.72s on 10s. My call, I don't have one. Here's my thought.
Yeah, got that right.
I think it's tremendously difficult to call this bond market, even if you call the economic data correctly. Just want to throw out there. Switch up the board and get to the FX market this morning. Weaker dollar story through much of G10, even with that weaker China data. Surprise to the downside. Aussie stronger. Commodity currency stronger, euro stronger, approaching 119 again. We advanced there by 118.87, Tom, up a little more than 1/10% as we kick off the month of August.
Yeah, I agree with you, John. The month of August is a mystery. That's all there is to it.
Do we even pay attention to the data out of the month of August, Tom? Or do we just look ahead to September? I'm thinking for the Federal Reserve more specifically.
Oh, I was thinking the Red Sox. I'm sorry.
That's where your head's
the
at.
Federal Reserve. Sorry.
Okay, aren't Rays on top?
Rays are on. Very good, John. Very good.
Yankees are closing the gap.
Yeah,
the spread's narrowing.
I sent Doug Cass a note, I think, yesterday, John. Watch
what did
the
Doug
Yankees.
say?
I didn't hear back from him. No, he's too large to respond to me. He ignores me. But
is that why you were upset this morning?
Yeah, Cass ignored me.
Doug messaged me. He said, "Don't talk to Tom. Okay. He's a Red Sox fan."
Galarian doesn't talk to me. None of the only one that talks to me is McKee.
Well, Mohammed's. What's Mohammed? He's a Mets fan.
Yes.
And they're doing well, Lisa.
Yes, they are, but don't talk about it because then they won't be.
So we can't talk about it?
No, I mean, I personally am just going to recommend that because the Mets.
This is quite a market check, isn't it?
Fantastic.
As we go from financial markets to baseball teams, Doug Cass, Yankees, Mohammed. Mets are on top, and apparently I'm not meant to talk about it. Okay, euro dollar 118.88. Let's get you some stocks. Some big deals out there, Romain.
Successful.
Yeah, let's start in M&A space here this morning, guys. The big deal here for Square. Square buying the Australian company Afterpay. Of course, this is a big installment loan company. Of course, Square now really trying to push into a space that's already become popular. Square shares down a little bit on the day. They're paying about $29 billion for this company. Some folks say, well, that's not necessarily enough. And so there's some concern here that this deal might not get through. There's some concerns that Square might actually be paying a little bit too much. That's why you're seeing the shares down about 4.5%. But Affirm, which of course has been in this space for quite some time, it's basically been Affirm, Afterpay, Klarna, sort of the three biggies in this installment space. We should point out that Affirm shares are up here. The stock had actually been underperforming here since the IPO that it had back in January, but it's getting a little bit of a pop here, up about 8% here in the pre-market. Another big deal here. This is with Parker Hannifin. Of course, a big aerospace component company, going to buy Meggitt over there in the UK. Of course, this is a big deal here. It's about $9 billion, but it's going to double the size of Parker Hammond's aerospace business. So another big cross-border deal to keep an eye on here and to see whether this actually gets worked out and whether there are any sort of antitrust concerns. Flip up the board here. A few other stocks to keep an eye on. This in the travel space. Remember, last week we did see the airlines get sold off pretty heavily. They're getting a nice little bid today. There is still some concerns here about the Delta variant and how this might affect travel going forward. But then on the plus side, you had two interesting developments here, and that was the first full completion of a cruise from Carnival Corp. This is their Princess line, which went from Seattle to Alaska and back, and then Norwegian did the same. This was from a trip out of a port in Greece, went around a few of the European islands and back again. These were the first two full successful with paying passengers on board that we've had since the pandemic here. Another sign of normalcy, but again, keep an eye on the Delta variant, guys, and see whether that has any sort of effect on this going forward.
And John, that's important. That would explain where Lisa was. She was not on Crete.
Lisa was not on Crete. Did we confirm where Lisa actually was?
Yeah.
We never did we?
Maybe she was on a boat floating around.
We're going to thank Romain. Thank you, Romain.
Looking
forward to the close a little bit later
this afternoon.
on Bloomberg Television, alongside Taylor Riggs and Caroline Hyde. Where was Lisa? Lisa, did we confirm?
No, we just...
I'm going to have to go do some more field research to come back and let you know where I was.
Are you done? Is the vacation series done for the summer?
Oh, no.
I want to...
There's an additional episode.
I want to say no, but unfortunately, it's yes.
Is it yes?
Yeah, I don't have any more planned vacations. question.
So now you're just asking a load of questions about kids back to school every single morning
That's
for no
right.
particular reason whatsoever.
That's right. For no reason, I'm going to be
of course, we
really
understand.
gloomy.
She's got the third grader reading War and Peace.
Even gloomier, Lisa.
Yeah, well,
Even gloomier.
that's what happens when I don't get vacation, so get ready.
Futures up 19, the VIX 18.43. We need to get ready for an economic week, and we get a briefing from Michael McKee, our Chief Economics and Policy correspondent. The jobs report on Friday will frame what? Does it frame the Fed for the next meeting, or is it just another data point along the way?
Just another data point along the way, in the sense that the next meeting doesn't come until after they get the August jobs report. So we're going to have two sets of numbers to work with. And, you know, this meeting is going to be kind of a little different. This data, we always look at how many jobs are created, but this month what everybody wants to see is how many people are looking for work. Are we seeing the labor markets open up some so that people come back into the labor market looking for jobs, and the big holes that we have can sometimes get filled?
Link this into the labor participation rate, which is not recovered to February pre-pandemic.
You know, it's interesting. You take a look at the participation rate by age cohorts, and the prime age, 25 to 54, has kind of stayed flat. It's the older folks like me and you who have dropped out of the labor force.
Yes, yes, we have.
The graph
Still waiting for that one, Mike.
The graph is tremendous. Yeah, I set him up. He knocked it down.
John's got the thing on his desk, the sand thing on his desk, the hourglass.
These are the days of our lives.
Could
like
you get my
sands in the
walker,
hourglass.
please? I need my walker.
Carry on, Michael McKee.
So we have to fill the hole left by the folks who had decided to retire.
Oh, really?
And so other than
You're killing it,
you're
Mike.
keeping
You're
the
just
jobs
killing
report
it.
going here, Tom.
Whose idea was this?
Mike, how relevant is this data this Friday, given we have a Federal Reserve, some of the policymakers on this Federal Reserve are waiting for the September data that they will not see until October?
Yeah, we will get the August data, so we'll have 2 months of data for their next meeting. But the question is not what they're going to do, but when they're going to announce what they're going to do. And so this meeting isn't really going to play into that too much. It appears, from what Jay Powell said at his news conference, that they are not going to be making a major announcement at Jackson Hole, but they could always change their minds. I suppose if the data came in very strong. We are expecting a pickup. We are expecting better news. Maybe that makes the markets feel better, but there's not going to be any change in policy anytime soon.
Well, you bring up Jackson Hole. This line from Governor Brainerd, I expect to be more confident in assessing the rate of progress once we have data in hand for September. Was that Governor Brainerd pouring freezing cold water over Jackson Hole speeches, Mike?
Yeah, I think so. And one of the reasons that I asked and others asked about Jackson Hole in the news conference last Wednesday was that the market's expecting Jay Powell, or was expecting Jay Powell, to maybe lay out their tapering plans. If he were to do that, it would mean that they had agreed at their meeting to a plan that he could lay out. And it appears from everything else he said that they did not. We'll get the minutes, of course, before we get to Jackson Hole. And if they have not, then there isn't something for him to say. And I think the Fed wants more data, not just on jobs, but they want the price data. They want to see if they are right about the number of things going up in price being limited to things that are just hit by supply chain problems.
Mike, I just want to let you know that John thanks you because he was looking to take the month of August off, and he wanted to make sure Jackson Hole was going to.
Michael Gapin of Barclays already said yes.
He basically,
ahead of the Brainerd speech, just to be clear.
He just basically said that, you know, it's going to be a snooze fest, and go ahead, John. So we will be hearing about your vacation plans. Mike, going forward, though, you talk about price pressures. There was a redefinition of transitory by Jay Powell, which means it's a long time, as we were just hearing from Michael Sowell earlier today. What are some of the data points that you find most important when it comes to price pressures in the next few months that could indicate how quickly they will taper, and even the potential for rate hikes that currently are being priced out?
Well, the next and most important number coming up in August is going to be the CPI, because it comes out in the middle of the month. The number that the Fed follows, the PCE, just came out. It comes at the end of the month. So for this month and ahead of Jackson Hole, it's going to be CPI, and it's going to be, we're going to watch used cars, we're going to watch rental cars, we're going to watch hotel rates, and we'll look for any price pressures anywhere else that appear to be building. Not that they're not already higher, but that appear to be building.
John, he's going to be watching the Desert City Ramblers at the $1 Million Cowboy Bar in Jackson Hole. That's real.
Traders, I've got to have to close position on Japanese yen. I have to cancel it. As you can see, it moved away, and I've been waiting for a couple of hours. It didn't move up. So let's wait for another time. All of you guys who decided to trade Japanese yen and was waiting for this position get filled, let's wait for another time, okay? Because looks like momentum changed and it moved to another direction. I'll speak to you later, so cancel this order to sell short. I'll speak to you later, guys.
Wait to see how the jobs market progresses. Aren't we having two different conversations here? And after a conversation with Mohamed Al-Eran on Friday, and Jim Bianco of Bianco Research wrote in as well, they were wondering whether Chairman Powell's appeared inconsistency with his communication is actually just a reflection of the inconsistency within the Federal Reserve on key arguments.
Well, that may be to a certain extent. The big difference there is that the folks who are arguing to leave the accommodation in place of QE argue that the Fed promised that it would keep rates low for a long time. And it is the promise, not the rates, that they have to live up to. Because if they say, we're going to keep rates low till the end of the year and then don't the next time they come back, then the market's not going to believe them. So there's firm believers in forward guidance, which is what this amounts to. But the people who think that they should start tapering soon are starting to look at the cash piling up in the system, and they're starting to worry that we're going to see some major disruptions to the financial markets.
Mike, thank you. Where did Tom Porcelli go? I thought we had Tom Porcelli here.
Yeah.
He didn't pick up the phone.
I think we scared him away.
He didn't pick up the phone. Michael McKee, great for you to jump in the seat.
90
Anyway,
minutes.
Michael, thank you. Looking ahead, I think, to Jackson Hole in some way, shape or form. Equity futures up 20 on the S&P, advancing 0.4% in the next hour. Stephen Stanley of Amherst Pierpont from New York City. This is Bloomberg.
With the first word news, I'm Ritika Gupta. The U.S. Senate is on the verge of giving President Biden a big win. Lawmakers are heading towards passage this week of a $550 billion infrastructure bill. It would provide the biggest infusion of federal spending on public workers in decades. The money would fund roads, water projects, the power grid, and a whole lot more. The bill would still need to be passed by the House, which won't take it up till next month. The securities regulator in China is calling for talks with its American counterpart on overseas IPOs. Last week, the Securities and Exchange Commission increased disclosure requirements for Chinese companies that want to list in the U.S. That came in response to Beijing's clampdown on private industry. Goldman Sachs has become one of the last big Wall Street banks to raise pay for junior bankers. Bloomberg's learned that first-year analysts will now make at least $110,000. Pay for first-year associates will rise to $150,000. Goldman's own analysts made a presentation revealing their crushing workloads. And at the Tokyo Olympics, the U.S. women's soccer team hopes for a gold medal have been crushed. Canada upset the U.S. 1-0 in a semi-final match today. Jessie Fleming scored the game's only goal in a penalty kick in the second half. The U.S. will now play the bronze medal on Thursday. Canada will play either Australia or Sweden in the final on Friday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Some of the best deals in history have been passed on by a very large number of people. The money is made on the aberrations. And so I would say you want to be generally open-minded and humble about your conclusions about what all these different signals mean.
We can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Went up to Maine and had a lobster, and it's not as romantic as Lisa going to Greece.
Tom Keene says what?
You mentioned Maine and the lobsters up in Maine. Well, they can't compare to what you can see in Greece. Even better, I can't pronounce it. Astracoma carinata.
I nailed it.
It's not thera, whatever. Astracoma.
You're nailing it.
Carinata.
You're nailing it.
We're figuring out the hard stuff for you on Bloomberg Surveillance. Mornings on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Across the board, we see, more inflation than we have seen probably at any time over the last decade. Now, we are able, through our hedging policy, to lock in lower pricing than what you see kind of top line in spot pricing, but still the impact will be significant.
What a line from Dolph van der Brink there, the Heineken CEO. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's your equity market this Monday morning, shaping up as follows, up 20 on the S&P. We advance 0.5%, 0.4% to kick off the month of August. Into the bond market, yields unchanged at 122.55. And foreign exchange, dollar weaker through the bulk of G10, through the bulk of this morning. Euro dollar 118.83. Advancing there a little more than 0.1%. And just to round things out quickly, TK, 72.91 on WTI, negative there 1.42%.
John, we saw John Stolfus at OPCO just up on the S&P 500 estimate as well. Ira Jersey for Bloomberg Intelligence moments ago. John, those are stunning numbers from Mr. Jersey, getting out to 1.79% 10-year over the next 5 months and out to 1.86 out a good end of 2022. That's price down, yield up.
And looking for curve flatter through 22. Yeah. That's the bit of this that gets my attention. And I wonder if Ira's buried the lead a little bit here, because I emailed him back straight away, Tom, to see what he was expecting to happen at the front end and on what. And I'm looking forward to getting that reply in the next couple of minutes.
He says Fed happens. I mean, what Ira's saying is,
well, essentially, if you think 186 on 10s, Tom, and you think we're going to have a flatter curve, something's going on at the front end.
Yeah. I mean, you mentioned Lyle Brainerd over the weekend, and that's what happens. Jersey's in the Lyle Brainerd camp. Let's go.
Do you think that makes sense for the Governor Brainerd camp? I don't think that's in line with the Governor Brainerd camp, Tom.
I don't know. They're looking for, they're looking for an action, a process. Let's go, and that's how you get out.
Governor
to
Brainerd
yields.
might be one of the more patient officials. In fact, probably the most patient official on the Federal Reserve. That feels
Bullard
like a President Bullard.
But they're always that way. Bullard and Kaplan have always been that way.
If I'm expecting a flatter curve through next year, with yields going 179 this year to 186 next year, and I've got to get a flatter curve, then something big needs to be happening at the front end.
Exactly.
And that's a hawkish move from the Federal Reserve, surely.
Well, we'll see on a hawkish move. Very interesting. We'll have Ira Jersey on through this week, this jobs week, to talk to us about the fixed income space. Right now, and this really dovetails into Damian Sassower adding value a few hours ago for Bloomberg Worldwide. David Wilson considers China.
Absolutely, Tom, and specifically the weight that Chinese stocks of all kinds have in the MSCI Emerging Markets Index. Now, we know really the story of the past month or maybe the past 6 months is how Chinese companies listed here in the U.S. have taken a tumble. You know, you've got the NASDAQ Golden Dragon China Index, one benchmark for that group, down 25% for the year. You've had a spillover into stocks traded on the mainland and also in Hong Kong. So the MSCI China Index is down 12%. Now, you put that together with the rest of the emerging markets in MSCI's benchmark gauge, and basically you've got an index that's a little changed, while the S&P 500 is up 17%. So, you know, what really kind of jumps out is looking at China stocks. You know, before this year, you had seen their weight in the MSCI Emerging Markets Index go up for 10 years in a row, and last year actually get above the peak weight for tech stocks in the S&P 500 in 2000.
I mean, who determines the weighting there of the Pacific Rim Index?
Well, it's an MSCI decision. I mean, it's, you know, how many shares they include within the index that, you know, are free to trade, you know, how many companies they put in to be representative of, you know, the greater China market, you know, because you have to figure Hong Kong is part of that. So you put it all together, and you've just seen this country increasingly take over the index and arguably give the MSCI Emerging Markets gauge a dot-com moment.
Dave, if you take a step back, this is a truly watershed moment for investing in China. This is because of the new regulatory regime. They are changing the emphasis, and there is renewed regulatory uncertainty following some of the decisions over the past few weeks. How much are you hearing from analysts and investors that they are moving away from investing in China and looking at other regional economies to try to find investments that might be a little less subject to regulatory uncertainty?
Well, there's clearly some of that happening, Lisa, but the real question, I mean, given the share of China stocks in emerging markets more broadly, is how far can you carry that? And, you know, if you want to be in certain segments of the market, you kind of have to have China as part of that. You know, consumer discretionary, the biggest component of the MSCI China Index, and a big piece of that, clearly, Alibaba Group Holding. You know, you can throw in other companies like JD.com, but still, I mean, if you want to be in that area in one way or another, you know, it only makes sense that you have money in China.
20 seconds. What's your earnings week look like? Are you going to snooze fest through it, or is this like a busy week?
Yeah, it's a relatively busy week, and the last one, but I'll tell you, the number that really jumps out is that, you know, second quarter earnings growth for the S&P 500 is now up to 89%. I mean, we weren't close to that when companies started reporting, and that may only go higher by the time the week is done.
David Wilson, thanks so much. And John Farrow, that goes to what Stolfa said, and also Howard Ward and Cabelli. And you really wonder here, when do we start hearing about S&P 5000 on a regular basis?
Didn't Scott Minerd start that off last week, Tom? Over at Guggenheim. He said over 12 months, Lisa.
No,
he said 5,000 maybe over 12 months.
He didn't start that off. Tom started that off by saying, do you see 5,000?
You've got to ask the question, Lisa.
No, Lisa, you are mistaken.
Oh, yeah, okay. I'm sorry. I am mistaken.
I had a response from Ira Jersey of Bloomberg Intelligence.
Fantastic.
So just
Please
to
share.
reiterate that.
He wants to weigh in on the SBR?
Pretends to move to 179 this year, to 186 next year, and buried in there was this idea that we'd get a flatter curve. It's a mild flattening through next year. He's looking for twos to move into the 60s, Tom, from the in and around 20 basis points they're at right now. And he says the following: the idea is if the Fed is going to hike even in late 23, but the end of 22, the front end will need to be fully pricing for that, and that's why he's expecting that gradual move through in 2 years. So it's not massive flattening through next year. He just says that's where the bias might be through next year as we start to anticipate some of these hikes.
Yeah, but I'm wondering what that does to my Austrian 99-year paper. I mean, this redounds through the entire market.
Of course it does. And I do wonder, Tom, we're going to be talking about a curve flattening through next year. And what are we, 2 years into the recovery? It's pretty early for this kind of stuff, isn't it?
Yeah, well,
peak yield
but this
curve
is
at the start of the year, Q1. Some people have made that call.
But John, and this goes back to Howard Ward on the growthiness of a 2023 call. John, this is the most wacko August I've ever seen. August is always nuts, let's be honest.
August 2nd, the most wacko that Tom's ever seen.
Nobody has a clue, John. I'm sorry.
Tom, I'm with you.
Nobody has a clue.
Well, never mind this
Labor Day.
month. Get to September, you're right. Yeah. And it's September that is so pivotal, I think, for so many of the debates happening on Wall Street and beyond. And Lisa, you've made that point as well.
The idea that you're talking about with the flattening yield curve highlights the reaction function and the uncertainty around not only the data, but the response to the data. I mean, do we get a lower yield on the 10-year, for example, if we get an incredible jobs number, right? I mean, what's the reaction function here in markets?
Couldn't agree more. That's what I said about the Morgan Stanley call. You can call the data right. Can you get the market move in response to the data right? That's the second call. And that's been the harder one, if anything, over the last few months. Up next, Lisa Hornby of Schroders will be joining us on this bond market. In your FX market, euro dollar 118.89, advancing 0.2%. Your equity market positive 0.5% on the S&P. We advanced 20 points. A nice little lift as we kick off, what did you call it, Tom? The wackiest month of August you've ever seen.
I mean, I have no idea
on
what
radio,
the Red Sox will do.
On TV, this is Bloomberg Surveillance.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tianyi Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y12 rocket.
我们一定服从命令，听从指挥，沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance, and more.
2022年完成空间站的在轨建造，建成国家太空实验室。之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station.
出发，是，敬礼。
China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We're already in an economy that has seen peak growth on a quarter-to-quarter basis and is beginning to slow.
We are looking for a pretty significant deceleration as we go into 2022.
We're still getting some very high and potentially very concerning inflation readings in the near term.
We're seeing a Fed that's moving a little bit faster, a little bit further to pull back on these purchases.
It takes markets a long time to realize that something really fundamental has changed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Jobs week this week, the beginning of August, and the interesting end of the summer. Just extraordinary to see. Futures up 20, the VIX 18.39. And John, the bond market gives me signals I've got a greater negative real yield.
Your nominal yield right now, Tom, 122.22. You mentioned payrolls. That's this Friday. So 2 dates for the diary for the month of August. August 6th. August 11th. This Friday, payrolls. Next Wednesday, Tom, CPI in America. Those 2 data points in the early part of this month set the tone for the rest of this month, going into Jackson Hole month end.
Well, they said it for Jackson Hole. I'm a little bit removed from Jackson Hole based on what Powell said at the press conference and that. But, John, what I would see is the absolute mystery of August, and once again, a bid to the equity market, which speaks volumes.
You've got to see August as the road to September.
Agreed.
It's the road to September.
I like that.
Do we have the return to office
poetic.
lined up in a way that people anticipate? Do we have the return to school lined up in the way people anticipate? Or does anything between now and then knock us off course? That's what August is about for me.
And to me, Lisa, the whole thing here is the movement of watching full faith and credit bonds, and then you bring it over to everything else in the bond space, including $1 trillion overnight repo.
And the question is really what could make yields go higher? And add this to the lower yield equation. Liz Kappa-McCormick of Bloomberg News reporting today that basically for the first time in 5 years, the U.S. Treasury Department will probably start slowing their issuance of bonds and of notes. Basically, the U.S. is going to be selling less and less debt. They need to raise less money as they start moving away from funding some of these massive fiscal plans, right? So this means that even as the Fed starts removing some of its accommodation, the actual supply, if you look at the supply-demand dynamic, is going to be going down. This could actually lead to yields staying low or pressuring them lower.
How big a deal is the jobs report Friday, John? I mean, there's a cacophony here to this August I've never seen before. Obviously, unusual times of pandemic and that. But, John, this jobs report really shapes up as Tom, could be a game changer.
It's the same question as the previous month, as the month before that,
I totally agree.
The month before that. Demand in this economy is really robust, pretty much everywhere you look. We've got to work out how the supply side of this economy responds to that demand. That's still the question, which is why I'm going to reiterate and repeat what I said just moments ago. That's why September for so many people is so critical. It's the first test for the supply side of the economy to respond, because many people have been more forgiving of downside surprises. They've been able to sit here and say, oh, look through this, because in September, return to school, enhanced unemployment insurance, that ends. Let's wait for the supply side of the economy. I think many people, for the same reason, forgiving the surprises to the upside on CPI. If we don't see the supply side of this economy respond, Tom, if we don't see participation start to lift, I think that starts to push some of these arguments that some people have held through the year so far. They start to crack a bit.
Quickly on data, I'll do equities. The Dow up 130 points, so the VIX goes to 18.32 with SPX up 22 points. Small cap helping out with a larger 0.9% move. John, equities with a lift this morning.
Early days, but equities look good, Tom. Bond market stable, 122.22 on 10s, yields go nowhere. And a dollar's weaker, euro dollar 118.89, and hardly anybody's talking about weaker than expected Chinese data, because it's very hard to find out where weaker than expected Chinese data is showing up in this market this morning.
Yeah, and I see it in oil as well. I mentioned a quiescent $74 on Brent crude, down 1.3%. We get smarter with Lisa Hornby, with Schroeder's head of U.S. multi-sector fixed income, and very sophisticated at the entire depth of the yield market. Lisa, I want to channel Ted Lasso this morning. That's what we're doing here. And the basic idea is the belief in yield higher. Do you believe in yield higher? What's the path to get us to higher yields where we can frame an intelligent belief?
Yeah, well, first of all, I think it depends on whether we're talking about nominal or real yields. But just to start with nominal, we do think that yields belong higher. I mean, basically any sort of fundamental economic model that you could run today suggests that based on the longer term level of growth, and I don't mean the next quarter or so, which is still quite elevated thanks to the COVID recovery, but if any longer term basis, 10-year yields probably do belong at a higher level. And that's compounded by the fact that the Fed will eventually be starting to taper its purchases. I think what we've seen recently is that, one, there's a tremendous amount of liquidity in the system and it's chasing yields lower. And two, the fact that the market has essentially taken the terminal rate all the way down to around 1.5%. So the market kind of has this view right now that if the Fed starts hiking in the next, let's say, year and a half or so, they will not be able to get many rate hikes actually done. And that means the terminal rate will be 1.5%. And so the level of 10-year yields, in my view, is artificially depressed by that view. And I think that will start to correct itself, in part because I actually think that the Fed wants to take a slightly easier path to all of this and might delay the rate hiking cycle more than the market currently believes, which means the terminal rate actually belongs higher and nominal yields actually belong higher.
Lisa, just quickly on the taper debate, there's more debate to this than I think some people might imagine outside of the market looking in. You think tapering is actually bearish for treasuries because some people have taken the other side of that?
Well, it's hard to say right now, right? Because we had the sell-off and now we've had the rally. So where does that actually leave us? I don't think taper is actually the big story because I think the Fed is going to try to focus it on, look, the size of the balance sheet is going to remain extraordinarily large. So the incremental flow, they'll take down 10 billion per month, perhaps. It'll take them maybe close to a year to actually taper. But the real question is what happens after that? And last time they waited a year to actually start hiking rates after they finished the tapering cycle. But also last time around, they started hiking rates and then they also started reducing their balance sheet act.
I'm placing an order to sell short euro. The price I'm looking to sell, 118,873. If you're looking to sell short euro, here's the price, 118,873. Okay, I'll speak to you later.
To 2.5% versus the 1.5% regime we had been in previously.
Well, Lisa, we're focusing a lot on the 10-year yield, and some people might say, really, that's the one metric in markets, and yet this underpins people's call when it comes to stocks, when it comes to currencies, literally with everything. And increasingly, this is one of the most important factors to keep an eye on. And we keep talking about the demand side, the idea of the Fed's buying and how much they are buying, how much they might remove accommodation. And yet the supply side is also important. We came into the year talking about fiscal stimulus that was way above where we are seeing it come in now. How much does that play a factor in this? The idea that supply of treasuries being sold into the market probably will decrease a little bit more than people had expected, or at least not go as high as people expected. Does this lead naturally to perhaps a lower yield than might have otherwise naturally been the case?
Yeah, absolutely. But I do think some of that perhaps has been discounted, right? So when we started the year, we were talking about an infrastructure package of $2, $3, $4 trillion. Rates were significantly higher. So that has to some degree been marginalized. We're talking about a $550 billion package. Honestly, who knows where this is going to end up? I mean, the conversation changes week to week. But at this point, I think that the market's expectations for another large fiscal plan have been dampened to some degree. So if we got something significantly larger, I think that would need to be discounted into rates markets.
Love this quote from Ian Lynn, and just to jump in, Lisa, if I can. The extent to which treasuries will be driven by the fundamentals is as much of an unknown as the actual data itself at this stage. That's the problem, isn't it?
That's fair. That's absolutely right. And that's why that fundamental divergence that I mentioned to you, when you look at a model of where 10-year should be and where they are today, it's probably as wide of a gap as it has been. However, in our view, when you look at that over kind of a long-term, more structural way, those do tend to converge. Now, that doesn't mean 10s go right to the fair value model, but that does mean that we probably see 10-year yields start to drift higher in the next couple of months rather than, in our view, lower from here.
Lisa, always enjoy catching up with you. Send our best to the team, won't you? Lisa Hornby there, Schroders head of US multi-sector fixed income. Just to reiterate and repeat that line from BMO strategists Ian Lingen and Ben Jeffrey, in a note they wrote to clients. This quote: the extent to which treasuries will be driven by the fundamentals is as much of an unknown as the actual data itself at this stage. And Tom Keene, that is a big issue for everybody in this market.
David Rosenberg publishing moments ago, same idea, and he looks at labor and wage dynamics, John, and he's vicious. He just says, stop ventilating, hyperventilating about higher inflation. He's going the other way.
Dan Iverson, PIMCO legend, Tom,
interview
with the
that?
FT.
Yeah, very
just
good.
seen that,
Yeah.
just seen that now. This quote here, Lisa: there is a lot of uncertainty on inflation, and while our base case is that it proves transitory, we are watching the relationship between home prices and rents. There may be more sustained inflation pressure from the rental side.
Yeah, one of the biggest homeowners out there, Invitation Homes, actually raised their rents by 8% in 1 month, I believe in April. This idea here, this feeds into base costs. How does this affect the stickiness of the underemployment, the idea that people need to demand higher wages in order to make it even worthwhile for them to go back to work? I mean, again, this could bleed through to a higher inflationary pressure.
Just to quote more of this interview, as rents become more expensive, investors could become increasingly concerned about sticky inflation, pushing the 10-year towards 175. A lot of coulds in this. That's from Dan Iverson of PIMCO, Tom.
John, I go to wages, I go to labor. That's the foundation.
Futures up 19. We advanced 0.4% on the S&P 500. Your bond market unchanged. For all the talks of we must go higher, yields are at 122.72.
Yeah.
And that line from Ian Linen and the team over at BMO, the extent to which treasuries will be driven by fundamentals, as much of an unknown as the actual data itself at this stage. Want to get your head around. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. The U.S. Senate is on a path that could lead to a vote this week on that $550 billion infrastructure package. Negotiators finished the text of the bill yesterday, a crucial step towards eventual passage. Republican Senator Mitt Romney says neither side got everything they wanted after the Senate vote's final congressional action wouldn't take place until the House returns next month from a recess. The U.S. has formally blamed Iran for a deadly attack on an Israeli-linked tanker off Oman. Secretary of State Antony Blinken says there will be a, quote, appropriate response. U.S. Navy experts say they believe the ship was struck by a drone, killing 2 crew members. Iran has denied responsibility. China is now in the midst of its broadest coronavirus outbreak since it emerged in the late 2019. There are cases in 14 of the country's 32 provinces. That's an indication that the variant has been on the loose for some time. The new strain may be exploiting China's recent willingness to lower its guard when it comes to masking and distancing. It's the biggest acquisition ever yet for Square, the digital payments platform led by Twitter founder Jack Dorsey. Square has agreed to pay $29 billion for Australian buy now, pay later company Afterpay. Square says it is capitalizing on a shift away from traditional credit, especially amongst its younger consumers. Simone Biles will return to competition at the Tokyo Olympics. The American gymnastics star withdrew from most of her events because of mental health issues, but she will compete in the balance beam final tomorrow. Biles won the bronze on the beam 5 years ago in Rio. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
assume you have a lot of people saying the food isn't as healthy as they might want it to be. Is that the biggest challenge, or just growing the company?
Ray Kroc had a famous line, if you're not green and growing, you're red and rotten.
If inflation did seem to be persistent, the Fed wouldn't hesitate to act, and that you have the tools to deal with inflation. What do you say to critics on Wall Street who say, yes, you have the tool to deal with inflation, you raise interest rates, and then historically plunge the economy into recession?
Yeah, that's exactly the kind of logic, I think, that you want to avoid, that you get too far out of alignment with what's actually happening in the economy, and then you really have to react more strongly than you'd like, and possibly causing disruption in the economy. So you don't want to be in that situation. I think the risk management here is that if inflation does come back down in 2022, we're in great position for that. We're exactly positioned for that. But if it doesn't, we're not in such great position. So I think for that reason, we want to have some flexibility on this taper.
Okay, traders, position opened on euro at 1.18873. That's a short position. Okay, stay with me, all of you guys who managed to open position, who decided to trade with me euro. Stay with me, follow my trades, and we will close this trade and profit together. I'll speak to you later.
Markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
There is some reason to be cautious, but we do think that activity levels in Hong Kong will continue to benefit from some of the tensions we're seeing at the moment between China and the US.
That was Ewan Stevenson, the HSBC CFO, leaving behind a difficult month of July for HSBC and others dealing with what's happening in China rather. From New York City this morning, I'm thinking the Olympics, Tom. Live on TV and radio this morning alongside Tom Keene and Lisa Abramovich. I'm Jonathan Ferro. Here's your equity market up 19 in the S&P. We advanced by 0.4%. Outside of that, into the bond market, 122.72, euro dollar 118.85, and crude, Tom, negative 1.4%. We're down to $72.91.
ISM, does it matter this morning, John?
Yes, it does. It does. What does output look like? What does prices paid look like?
Yeah.
All of those things matter, Tom.
10 a.m. We'll see that this morning, and we'll have full coverage for you on radio and television. A number of summers ago, my book of the summer was Elizabeth Economy and President Xi, and she called it the Third Revolution. It was cover to cover, read every word. Someone expert on the granularity of Liz Economy's China is Leland Miller. With China Beige Book, he is definitive on the cadence and the pulse of domestic China. Leland Miller, what's it look like right now? How does domestic China react to what they see from Beijing?
Well, you've got a lot of factors that are pushing things in both directions. You've obviously got these nasty crackdowns in tech and the education sector. That's hitting the stock market, which is looking sort of nasty. You've got spread of Delta variant, which is creating uncertainty for the future. At the same time, some of the numbers that we're looking at are not as bad as everyone's fearing. You had a recent RRR cut, and that made people think, well, China must be doing really poorly if they're looking to stimulate the economy. Well, I think manufacturing is doing okay. Services actually doing a little bit better. So we're not as negative on the actual underlying economy, even though you've got these awful headlines just coming from every direction.
Okay, great. What do you do if you're advising Tim Cook of Apple? What is the Leland Miller perspective for big American companies who have this codependency almost with Beijing?
Well, you know, Apple is almost unique in that it figured out a bunch of years ago that it needed to have a contingency plan, but its needs and its production in China is so big that it can't really just move things. So I think what Apple's doing is what they can in terms of trying to create other markets where they can produce so they don't have so much of an emphasis and reliance on China. But they produce so much, you can't just move everything to India or to Vietnam or somewhere else in Southeast Asia. So they're doing the best they can. But if you're not Apple, and you should be way down the road in terms of contingency planning, just so you don't have over-reliance on China for the market, for the production, just because of all the different things that are going on, from the virus to...
Let's play stop on profit for euro at 118.853. Okay? Stop on profit placed. Whatever happened, you will not close this trade in loss. 118.853. Stop. Yeah? Okay? Stay safe.
Step 1 of 12 steps where they keep ramping up crackdowns between now and the Party Congress, which is a little over a year from now? Or is this their attempt to try to fix problems during what is basically a little bit of hiatus from disastrous headlines? I mean, they recovered from COVID faster than others. There's a little bit of a global recovery going on right now. So to some extent, this may be Beijing seeing a window to try to do some of these things that they pushed off for a long time. It's more likely that this is the first of many steps. So then I think you're going to have to watch not just the regulatory crackdown, because that affects stocks, but whether this spills over into pessimism on the economy at large. And right now, we're not seeing that yet, but that's something to watch for the second half of the year.
What are potential regulatory measures that you expect the PBOC to consider, that you expect Xi Jinping to potentially signal in upcoming speeches?
I think the most important thing over the next year will be signaling a continued pull away from a reliance on the United States or the West. All the headlines the past couple of years have been how the U.S. is threatening to kick China off its stock markets and decoupling through chips and other aspects of the technological relationship. What Xi Jinping really has to signal from a political standpoint is that China can go its own way. Now, that's not completely true. And in some things like chips, it's not true at all. But that's the signal that he has to be sending. China can do its own way as they enter a very politically sensitive year next year.
Leland, I'm trying to understand what's happening on the ground in the country at the moment, and I'm not getting a ton of information. Nanjing and the spread of the Delta variant supposedly from the airport there and the restrictions we're starting to see. What are you seeing on the ground? What are you hearing?
Well, we actually track this now. So we have a China-based COVID tracker. And what we do is we ask our corporate networks whether they're seeing a spike amongst their workforce, either in a particular city or nationally. We saw the spike in Guangdong 2 weeks before it was announced, affecting the ports and the shutdowns. And we saw something a couple of weeks ago showing that there looked like there was a bit of an outbreak going on. It's hard to know what is a mildly serious outbreak and something bigger, because Beijing is very interested in suppressing information on it. It's not good news, so they don't like to report it. They're also cracked down. They see 6 cases and they shut things down. So really, it's watching the spikes on our COVID tracker to see what is just sort of the role of this thing, so the ebb and flow, and what looks like it could be a serious spike that's going to affect economic activity.
Well, that's the question I have, Leland. The restrictions you're starting to see introduced on the ground in cities like Nanjing, is this a threat to economic growth in China for the coming months?
Absolutely. I mean, we all know how incredibly contagious the Delta variant is, and that's what China's dealing with right now. They have a vaccine, but it's not really a vaccine. It doesn't show anywhere near the protection that all these other vaccines being used in the United States and elsewhere are boasting. So there is a real worry about this. And so what you're going to see from China is a continued very aggressive shutdown response. Every time they see a small outbreak, what does that do? It throws off commerce. It throws off the economy. And if you see it in enough places, it's going to affect macroeconomic activity. So we haven't seen that yet, but what we're seeing right now with these mini spikes is something to watch going into September, because this is something new. This is something new.
Yeah, especially given the efficacy rates of the particular vaccine that was distributed there compared to, say, Pfizer and Moderna in much of the West. Leland, great to catch up. Really important topic. Leland Miller there, China-based book CEO. And for many people, including myself, actually, they didn't understand the geography, the deep geography of China with any real experience. Going through the crisis, Tom, the pandemic, to hear some of these cities that some people had never heard of, and then to hear the population, the sizes of these cities. Nanjing, 8.5 million people. These aren't small places.
I was sitting in Shanghai once, John, and someone turned to me and said, we've got to go east 70 miles. And I said, well, I don't know the town. What is it? And he said, it's one of their 14 Pittsburghs. And that sort of brought it home.
Yep. And Lisa, we've got to work our way through some issues here.
Yeah.
What the Delta variant would mean for China, the restrictions that could be introduced.
Or Indonesia.
And what that could mean for growth.
And frankly, the fact that China is a massive contributor to global GDP, if you think about it, I think it's something like almost 10% of global GDP. This really leaves the United States as a swing factor, John, in terms of economic dynamism, really leading global growth.
Yeah, no base case here. Just tracking the data, seeing where this goes. Equity futures up 16 on the S&P. We advance by 1/3 of 1% into the bond market. 10-year yields 122.88. Yields higher by almost a basis point. Heard on radio, seen on TV alongside Tom Keane and Lisa Abramowitz. I'm Jonathan Ferro. This is Bloomberg Surveillance.
Is entirely online, ostensibly because of the pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
Okay, guys, position closed on euro at 118.853. We have 200 pounds in profit. Well done, guys. Let's move on to another trade.
The video game industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Some of the best deals in history have been passed on by a very large number of people. The money is made on the aberrations. And so I would say you want to be generally open-minded and humble about your conclusions about what all these different signals mean.
For the people here on Earth who are wondering, why are we investing all this money in space, this time in space, talk to us about how you believe this will actually help benefit us here on Earth.
We're building infrastructure. This is a road. We're building a road to space so that future generations can build the future. We live on this beautiful planet. It's the most beautiful planet in the solar system by far.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty
extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Live from New York City for our audience worldwide on TV and radio alongside Tom Keene and Lisa Brabitz. I'm Jonathan Ferro. Here's your equity market at 8:30 Eastern, 60 minutes away from the opening bell. Equity futures positive 17, up 0.4% off the back of a sixth straight month of gains on the S&P 500. Into the bond market, a 25 basis point move lower last month. Yields down to 122.72. That's how we kick off things this Monday morning and for the month of August. Going into payrolls this Friday, moving target, the median estimate as these estimates pour in going into Friday, Tom, now just dipping down to 888, so just south of 900K at 888,000.
Let us return, John, to May 7th of 2021. The survey was, what, a million or this or that, 900,000. Oops, and it came in a little lower. Stephen Stanley, like all of us, sobered up that day with Amherst Pierpont, their chief economist, and joins us right now. Stephen Stanley, why is this time around different than the joy of May 7, 2021?
Right. Well, I think that was the day that we realized just how severe the supply side constraints were on the labor market. I mean, as an economist, you know, I've been trained, the Fed economists have been trained for decades, that when you look at the payroll numbers, when you look at the unemployment rate, what you're really trying to get at is the strength of demand in the labor market.
Yep.
And we knew that demand was very strong in the spring. We had seen a big payroll number the month before. And what we've learned in the intervening months is that demand is indeed very strong, but there have been some pretty severe supply side constraints. People are not flocking back into the labor force in the numbers that we had hoped, you know, for the reasons that everyone suggested: health concerns, childcare issues, and the supplemental unemployment benefits. And the latter two of those should be starting to ease now. Obviously, remote schooling should be less of an issue in the summer than it was during the school year. And the supplemental unemployment benefits have expired in about half the states. So I think that's one story that we're likely to see in July. The other one with regard to payrolls is just a seasonal quirk, which is, you know, the seasonality around education workers is pretty extreme, and obviously they're being, you know, they're not on the payroll in the summer, and so to the extent that schools weren't operating full bore, you would have a smaller number of education-related layoffs in July, and therefore the seasonally adjusted number in July for the education workers is likely to be up very sharply.
Stephen, you're anticipating the supply side of this economy to respond from September onwards. If it doesn't, can you see wage pressures persisting, this inflationary pressure persisting in a way that could reshape the conversation at the Fed?
Absolutely. I think that may be the problem for the Fed. As long as demand is as strong as it has been, then, you know, it's a pay me now, pay me later thing. Either we're going to get a very strong recovery in economic activity as the supply side normalizes, if it normalizes quickly, or if it doesn't, we're going to continue to see these bottlenecks that have helped to generate wage and price pressures. So neither of those scenarios is really entirely consistent with the sort of monetary policy that the Fed is running.
There is, of course, very little they can do about the supply side of the economy, Stephen, except let demand rip for long enough that the supply side eventually responds. But if the participation rate doesn't recover, that surely changes the path of things for the Federal Reserve. At what point do you think that conversation could gain a little bit more traction? Is that a year-end conversation or a New Year conversation?
Well, I mean, they've been pointing to September, right? School starts again, the unemployment benefits expire in the other states. So, you know, let's see what happens in September and the months forward. I think things may pick up even before September, but if they don't, and we're still talking about these same issues in October, November, then yeah, I think the Fed definitely needs to have a pretty tough conversation around that.
Stephen, you keep mentioning the enhanced unemployment benefits rolling off in September, and there have been a number of states that have already ended them in large measure. And some studies have shown that they haven't really added that many more jobs than other states, that they aren't necessarily on the forefront. The early data, does it suggest that perhaps there's more slack in the economy or less slack in the economy than people think?
You know, I think it may be early to tell. Obviously, this July payroll number will be the first one where we'll get a gauge on that. On a, you know, in terms of the really big national data, We've definitely seen some impact on the claims numbers, so we know that fewer people are collecting benefits in those states. The presumption is you'd think they, a lot of them would want to go out and get a job. So, and there's certainly plenty of openings. So we'll see what happens. I think you're going to have to give it a month or two before we have a better sense of exactly what's going on.
The inflationary pressures, meanwhile, that we are seeing in wages, we've been talking about Goldman Sachs raising their entry-level salaries this morning. Others doing the same, Credit Suisse coming out and saying that they were going to also pay initial associates about $100,000 a year. Question, is this just isolated to the white-collar jobs, to the more high-paying professions, or are you seeing it consistently and evenly throughout all careers?
No, I mean, I think most of the headlines over the last few months have been more on the lower end of the spectrum, the Walmarts of the world and the fast food restaurants and a lot of across the restaurant industry having to raise wages to get people in the door. So I don't think that it's just white collar or blue collar or service sector. I think it's kind of across the board. And I think part of what's going on, I think this is directly applicable maybe to the Wall Street headlines, is after the pandemic, people are kind of re-examining the whole work-life balance issue. And it may be that people are inclined to either work a little less, or if they're going to work really hard, they want to get compensated more, more for it. So it may take a couple of years before we have a good handle on that. But that is something that you could see as a big factor for the economy moving forward.
Stephen Stanley, it's a real sophisticated Monday question. Which is the horse and which is the cart? If there's an inflation-adjusted wage which is negative, does that lead to wage increases? Or is there some other mystery thing that leads us out to a wage breakout?
Well, I think there are two things really that should be driving that wage picture. One is the inflation story, and in particular, inflation expectations. And that's, I think, why the Fed is so focused on that. So if inflation just bulges up once and people don't expect it to last, then they're not necessarily going to storm into the boss's office and say, hey, I need a raise to make up for this 5% inflation we're going to see forever. The second thing is the leverage that workers have in the labor market. And right now, the labor market, despite the level of the unemployment rate, I would argue the labor market is as tight, if not tighter, than any we've seen in decades. And so, yeah, workers have a lot of leverage in that sort of an environment. And, we'll see if that persists. And if it does, I think workers are going to continue to be able to demand higher wages. And then you do run that risk of kind of, one step in front of the other, and you get wages going up and then inflation and then back to wages. And, you end up eventually, if you don't arrest that, you end up back in the 1970s.
Stephen, just quickly here, this is as tight as it ever has been, and you think that can persist. You think the Fed's wrong here? That's what I'm hearing, and I'm just wondering when you think they will actually break down to your point of view of the world and what kind of liftoff you're expecting here.
I do think the Fed is looking at it incorrectly. I think they're looking at it the way that I indicated at the outset, which is the way that we've always looked at it, which is you focus whatever you're looking at in terms of the level of the unemployment rate, the pace of job growth is only an indicator of labor demand. I do think they're coming around. If you look at, 3-4 meetings ago, all Powell was talking about was, the unemployment rate's too high, and even the stated unemployment rate understates the health of the labor market. And with each successive meeting, he started to talk a little bit more, acknowledging that labor demand is very strong. I think they get it. I think that they're just coming around slowly to that point. So as you mentioned before, it seems like it's probably, end of the summer as some of these special factors should be starting to fade, that they're really going to be able to focus on what's actually going on.
What's your liftoff call, Stephen, for rates?
I still think it's next year. I think
early next year.
I have my first rate hike is June, so middle of the year.
Wow, Stephen Stanley, we should have started there, shouldn't we?
Yeah.
Next time. Amherst Pierpont, Securities Chief Economist. Stephen, thank you. June of next year. Tom Keene, that would be quite a conversation shift at this Federal Reserve.
And it's the plan of the show. I mean, it's what we do, folks. I mean, there's a lot of different views out there. But, John, I mean, August is just, who's on next? I mean, what's their view going to be? We don't know.
Well, everyone's pointing to September. And what's interesting here is both the Doves and the Hawks seemingly supporting to September.
Well, implicit in his call, first of all, there's a lot there. Also, the idea that he thinks that this labor market is as tight as it's ever been. You're right to emphasize that, because that is a huge call, and it raises a question: what's the consequence of the Federal Reserve failing to see that? If this is true, right? I mean, is the consequence rampant inflation, or is it not necessarily that big of a consequence? Where's the balance of risk that would actually prompt them to raise rates so soon, contrary to everyone's expectations, John?
So if you believe that this labour market is tight, and some people do, you'd have to believe that this participation rate doesn't recover. And if you believe that the Fed has to go early, then is June early? Is that the earliest they could possibly move? Look, this is just part of the wider debate. That's certainly not the base case or the consensus view right now.
And it's a great point, because it raises a question: then what would it take to raise the participation rate? What is the obstacle? If wages raise, if you end up with a robust economy, why are people not going into the labor force?
Do what Credit Suisse is doing, because they're raising salaries for second-year analysts to 105 and 110 for third years and 100,000 for first years. That's coming from Financial News. I mean, I'm joking about this because the whole analyst class of whatever year are going to get some significant amounts of money. And Tom, you've said it repeatedly for much of the last decade. If you want them to come, raise prices, raise wages.
Yeah, I'd raise the wages. What I would suggest here, John, is into this August, we are completely data dependent like we've truly never been. I mean, we're just going to stagger to ISM here in what? T-minus 60,
190.
80
there we go.
minutes. You know, we're going to stagger to ISM, stagger to claims, stagger to CPI, and we're just going to
A
do that all
lot of
through the months.
staggering.
A lot of staggering. That's what you do when you come out of a bar, isn't it?
Yeah, I wouldn't know.
You wouldn't know, of course. The Schwab Center for Financial Research Chief Fixed Income Strategist Kathy Jones will be joining me at the top of the hour. I'll catch up with her. I'll catch up with Mike Schumacher. I'll catch up with him and Jack Caffrey of JP Morgan. So we'll do the bond side and the equity side to kick off the month of August in a beautiful New York City. This is Bloomberg.
With the first word news, I'm Rishka Gupta. The U.S. Senate is on the verge of giving President Biden a big win. Lawmakers are heading towards passage this week of a $550 billion infrastructure bill. It would provide the biggest infusion of federal spending on public works in decades. The money would fund roads, water projects, the power grid, and a whole lot more. The bill would still need to be passed by the House, which won't take it up till next month. Securities regulator in China is calling for talks with its American counterpart on overseas IPOs. Last week, the Securities and Exchange Commission increased disclosure requirements for Chinese companies that want to list in the U.S. That came in response to Beijing's clampdown on private industry. In Turkey, wildfires are raging for a sixth day near several of the country's biggest holiday beach destinations. At least 8 people have been killed, and a number of residents and tourists fled in small boats. Temperatures over 100 degrees and strong winds are making matters even worse. And at the Tokyo Olympics, the U.S. women's soccer team's hopes for a gold medal have been crushed. Canada upset the U.S. 1-0 in a semi-final match today. Jessie Fleming scored the game's only goal on a penalty kick in the second half. The U.S. will now play for the bronze medal on Thursday. Canada will play either Australia or Sweden in the final on Friday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
We had an exceptional Q2.
It's time.
The narrative of the day is strong earnings.
Bloomberg has the numbers.
We have about $12 trillion worth of market cap right here.
Find out who's winning.
Tesla beating across the board.
And who's losing.
That's actually pretty rare for Amazon. They typically don't miss on that scale.
And the voices to give you the important news.
Samsung reported another stellar quarter of earnings.
We are very clearly looking with confidence about what's next.
Bloomberg Television, your home for earnings season.
Very much encouraging all employees, all Americans, all people around the world to get vaccinated. I think it's very, very important. It is possible that we will come in with a vaccine mandate. We're certainly going to be very considerate about the best thing for all employees, but we haven't made a final decision yet.
The gentleman from Visa, Al Kelly, their chairman and chief executive officer, managing the message for corporate America on vaccination and unvaccinated. We're looking here at markets up 15, Dow futures up 84, the VIX 18.61. Lisa Bramowitz and Tom Keene to get you to at 10 a.m. here in an hour and 8 minutes. We'll get that first data for August, the ISM data. Right now in the pandemic, and this is a joy, Katie Passaretti is with Atrium. They're Charlotte, North Carolina, and the greater health system, a very mixed and prosperous North Carolina. We're thrilled she could join us this morning. Katie, I'm not going to mince words. It's about zip codes down there. You line up 10, you line up 12 zip codes, and the spread is absolutely extraordinary that you and other health officials are going to do. Just across 5 zip codes, you go from 20% vaccinated up to 50 or so percent vaccinated. How do you motivate the unvaccinated?
Yeah, so it's certainly tricky times, and vaccines are absolutely essential. We're seeing big upticks in number of cases, number of hospitalizations, and know that vaccines can prevent that surge. You know, it really is continuing to educate, continuing to have conversations with communities, and engaging peers in the community to have those conversations as well. Me as a physician, you know, I certainly, some people respond to science and facts and things like that, but a lot of people respond to their next door neighbor or their family members. So making sure we're engaging those communities and having those discussions, addressing the local issues. It's the hard work of getting people vaccinated, but it's so necessary.
Are they going to respond to people like the gentleman from Visa? Are they going to respond to publicly traded big corp America? Are they going to respond to middle business or small business to get vaccinated?
So, you know, I think the more people that get vaccinated, the more messaging out there on the positives of vaccination. So, you know, the protection, the ensuring safety in the workforce, the, you know, more people that are moving in that direction. I think that will help with communities. You know, you will have people that buck at that messaging, that kind of mandate messaging and whatnot. But, you know, the more people vaccinated, the more those kind of dominoes fall and we move in the right direction.
Dr. Passaretti, how much are people waiting for full approval from the FDA of the vaccines? Or is that basically a sort of straw man argument that you hear thrown out there as the reason for some hesitancy?
Yeah, certainly one of the top reasons we hear for people saying, waiting for full approval to get the vaccine, and that has not kind of diminished over time significantly. Certainly doing a lot of education on that the vaccine is approved under the FDA just as part of this public health mandate, and making sure people understand the nuances. But that certainly continues to come up as a barrier for some people.
Dr. Passaretti, can you give us a sense of how different the Delta variant is from the other iterations before it? I mean, we hear about increased contagiousness and the infectiousness even among vaccinated individuals, but how significant are these differences?
So very significant. We know that Delta spreads to about 2 to 3 times more people. So one infected person, instead of infecting 2 to 3 unprotected people, impacts 6 to 8 people. So much more spread, higher amounts of virus in the body. And while vaccines continue to be protective, specifically against severe illness, hospitalizations, and death, we are seeing an increase in mild cases of COVID in those vaccinated. So need to kind of, in conjunction with vaccination, encourage masking for right now.
Dr. Passaretti, you're one of the nation's experts in multi-drug infection, where the drugs don't work on a given bacterium, say Staphylococcus, whatever. Bring that research, which is different, over to the next variant after the Delta variant. I mean, are you people prepared for the next beast that comes along?
So, I think Delta has taken us a little bit by surprise, the rate of increase in cases in areas with low vaccination, and if we do not get better at vaccination very quickly, we're setting COVID up to become more powerful. So super important that we do everything we can right now to halt this.
You're in the White House today. They dial 1-800 Charlotte, North Carolina, and you're up there with the president and 6 other people, and they're over their lousy White House coffee. What's your advice to motivate people?
Yeah, we've tried a lot of things to motivate people to get vaccinated. I continue to think there's a role for education. I think in high-risk areas, there's a role for making sure people are vaccinated to protect that surrounding area. I don't think there's one distinct answer, as much as that would be a blessing for all of us.
Just to make cocktail conversation on a Monday morning, pay $1,000 to everybody who's vaccinated, and tell the unvaccinated you're going to get $1,000 if you grow up and get vaccinated. Does that work? Does that move the needle?
We haven't been super impressed with how incentives, in North Carolina, there's $1 million lotteries you can win from getting vaccinated. Other states have given $100 or, some people are motivated by that, but it hasn't moved the bar enough to date. Now, maybe that will change.
This has been wonderful. Katie Passaretti, don't be a stranger. This has been great. With Atrium of North Carolina, our Director of Infection Prevention. Lisa, this is like a real expert. She is wicked expert at the frightening thing of antibiotic resistance to bacteria. The COVID is not a bacteria. That's not the debate here. But it goes to the urgency, let's go, let's get this thing fixed.
Yeah, and not just with respect to this, but also going forward. And you asked the right question about further variants when it starts to mutate, because it will mutate. I mean, it's with the flu. And the question is, how quickly can we respond to it with vaccinations? And we see with the mRNA technology that perhaps they can respond pretty quickly to sort of tweak it. On the flip side, how much can we get confidence publicly that you should take it? And if not, what are the long-term social consequences?
Come on, Lisa. I think $100 is an insult to most people that are unvaccinated. It's like, so what? That's not going to do it.
What is this? You're like, pay them more, pay everybody $1,000, go out, get vaccinated.